Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, guys. Welcome back to another live stream. Let me get my screen fixed for you. Hope everybody's doing well. And like you just saw, make sure to check out DNA Funded if you have not already and you're looking to get funded this year. Link just got dropped in the chat for you. It's also in the description. And that promo code is A1T20 for 20% off any of their challenges. So check them out. Hope everybody's doing well. Gold trade here not doing so hot, but we're still holding together. We'll see if this support level ultimately plays out, but if it doesn't, we'll stop out of this trade. I've been sitting in this one for a couple days. It's just been back and forth, really no decision one way or the other, and we'll see what comes next for gold prices at least. Price action wise, like I said, if we take out this low, then that is going to be it for my attempt here on gold. I don't have as strong of a conviction on gold at this time as I did perhaps, a month ago or 2 months ago. I did take this initial this new trade. Edgefinder did still have a bullish reading, but has since kind of dipped back into neutral territory for gold. And so I really don't have a strong willingness to keep buying gold if it breaks lower. So I'm just going to watch it. If we take out this structure low, that's going to be my signal to get out of the trade. If we stay in the trade, if what happens on price action wise, we start to see something like this area hold, and we start breaking through these highs, then I'll just look to trail a stop on this. But so far, gold, I'm not super thrilled about it or super excited about the trade, but we'll see. If I stop out, I stop out and move on to the next trade. What I am more interested in right now is the NASDAQ. NASDAQ, to me, looks very good. We're starting to see a really strong reading on the Edgefinder. You've got a top setup of a plus 11 score. That being said, we just had news come out. So had some economic data that dropped just a moment ago. ADP numbers, and we have advanced GDP numbers coming out in just about 10 minutes. These are both pretty important statistics. And that ADP number was pretty weak. Look at that, 62,000 jobs added compared to the forecasted 114,000. And they revised the previous number down slightly from 155,000. So a little bit of a soft labor read this week with JOLTS job openings coming in soft yesterday. And then, of course, more softness in the ADP number that came in this morning. A little bit of softness on labor. So let's see how that did for the US dollar. You can see US dollar pretty unchanged at this time. Little bit of softness in the US dollar, but really not a huge move there. I do think that advanced GDP has potential to move this market more. This concept, right? What's really under scrutiny right now is with all the tariffs, with all the uncertainty the question now becomes, is this soft data, which we talk about often on the channel as, concerns about tariffs, concerns about recession, concerns about growth, right? Do the concerns, right? There's fear out there, which is kind of quote unquote soft data. We've been talking about this a lot on the channel. This soft data, this sentiment, right? In some ways can be leading, but in some ways can actually be misleading, right? So be careful with this. People say, Nick, You want to be looking at your stuff when you look at economic data is lagging, right? When you look at unemployment data, or you look at when you look at inflation numbers, those are lagging indicators. Sometimes people will point that out, or say that, or claim that. I would argue that it helps to build a context, which can be very forward-looking. But what many people will say is, look at the consumer sentiment reports, look at CEO confidence, look at these other metrics that help us to look ahead. Well, that's a good theory, but here's the problem with it. What people say and what people do are oftentimes different. So when people say, oh, we think, the economy is going to crumble, like if that's what the consumer's saying, they're saying, oh, we're not going on a trip this year. We're really concerned about, traveling, or, paying for a new car. We don't want to do that this year. Like, inflation's going to be bad. When people say that, right, that could mean that they act that way, but it doesn't always mean that, right? What people say and what people do are sometimes the same, but sometimes they're different. What we call this in markets is the soft data versus the hard data. So when you're trying to study the economies of the world, when you're trying to study, the economy itself in the US, we're getting soft data that suggests bearishness. And now the hard data is what we're looking at. So when we look at something like a jobs report, which we get this Friday, if you are looking at this data and you're saying, okay, advanced GDP, which comes in 7 minutes, those are hard data points that we want some information on, right? Is GDP growth, the advanced GDP number, right? How's that actually looking? Because people have been saying, oh, CEOs are not going to hire, layoffs are coming, tariffs are going to, send prices to the moon. Maybe they do. I don't know. I'm not telling you I know what's going to happen. I'm telling you maybe they do, but maybe the market was overblown on that concept. We'll see. There very well could be significant layoffs and pausing of operations and things like that in anticipation of the tariffs. Again, I'm not saying I know one way or the other. I'm just pointing out that what people say and what people do is sometimes different. So we have to be careful. So if advanced GDP numbers coming out in just about 7 minutes, that should be pretty impactful to markets. We take a look at the dollar index here, pretty much sideways the last few days. If you get a strong advanced GDP number, the dollar may actually make a push back to some of these levels that we've been talking about, this 61.8% to 38.2% zone, right? Real quick, if you have a question for the stream today, we're going to do questions towards the end of my segment. If you guys would like to ask a question, please feel free to drop your questions using this link that we're about to drop in the chat. We've been doing this on the regular. I've been really enjoying doing these. But you can ask a question using this link that's just been dropped in the chat. It is also available, I believe, in the description of the video. And if you're watching on Twitter, a great way to get there is head over to a1trading.com. If you want to ask a question, head over to a1trading.com, live stream schedule right here, and click ask a question for the stream. When you do that, it'll open up a forum. You can take a second to write your question, and we'll review some of those towards the end of the stream. Hope everybody's doing well. Hope you're trading safe. So yeah. Ballout says still haven't received any. Ballout, send a message to us on Talk To. Emily is available. She can help you out. Like I said, we've got a wall of people asking for access right now. So thank you for your patience. It's not the cleanest way to roll out new features, but it is the best way for us to make sure that we get it to the right people. So we have for people who don't know what I'm talking about, we added a new tool, a new feature that is going to be available to our gold members. So if I go here and I go A1 Trade Tracker, we're building out a way so that people can see our trades essentially updated on their own, side of things, right? So any trades that I'm in, any trades that Frank is in, these are going to be updated here within this portal, which is going to be made available to our Discord Gold VIP members. So for those of you who are in the VIP and Gold members, this is going to be accessible to you. But we have so many people who have been requesting access to it all at once, and our team is completely swamped with requests for that. If you would like some information about that, please be patient with us, but you can ask us. You can live chat us on a1trading.com and just let us know that you would like access to the new A1 Trade Tracker. We're going to be building out a portal this summer. It's one of our summer projects. The team is going to be hard at work putting together a powerful all-in-one kind of educational portal and trade tracker portal for our Gold VIP members. Really exciting stuff. I'm actually so excited to get that built out, something we've wanted to do for the long term. We've had a lot of people say, hey, how can I better, how could I basically pull up a dashboard and see all the trades you're in? And that is basically what we're building. So it's going to be really cool. Anyways, dollar index still looks weak overall to me. I do think for me, in terms of setups, I'd be waiting for this pullback area somewhere in this region. I'd love to see the dollar have a couple up days because, look at that. NASDAQ's down 1% now. And gold, that would potentially stop me out if the dollar's strong for a couple days, stop me out of gold. I honestly am so agnostic to what happens with gold. If it stops out, I'm cool with it because then I can use that capital in other places. I do trade on a stock brokerage account and a cash account. So that cash can be put to work in other places that I like a lot more. So if gold stops me out, I'm going shopping. And if gold rips higher, then it's a nice hedge. So euro dollar, pound dollar, I'm looking for pullbacks on these ones. I'm broken record on these things for a while. Aussie dollar, I'm interested in this, but I would have liked something like this. Like give me that breakout pullback. I'm looking really interested in that. Dollar CAD, looking for retracements on this one. The Australian dollar, I pretty much have a dollar bearish viewpoint at this time on the US dollar. So I'm waiting for a whole bunch of setups. Look at Kiwi dollar, right? Give me a couple more days down on that one, and I'm probably involved on that. Awesome. That portal is a much cleaner setup. Ball out, man, I'm so pumped for it. Like, you think it looks nice now? Just wait. Like, you guys, if you're a regular, and Ball out you are, and several other people are, like, you've seen the Edge Finder do what it's done over the years. Like, we've got the one thing I can stand on is we've got like the dream team at A1. Like everything we build over time, because we've got great people, very creative, talented people on our team, we keep building stuff into better and better products. So this is like when I show you that A1 trade tracker that we're building, that is like phase 0.1 of where it's going to go. By the end of that product, I am very confident that you'll pull that open and it'll be like the ultimate educational portal and useful tool for traders who are looking to trade alongside myself, Frank, and eventually we'll get the rest of the gang in there too. But we're still very phase one with building out a system like that to track trades that are being taken by our team. So yeah. I'm going to do some questions towards the back half of the stream. I mentioned it earlier. If you want to ask a question, the link is in the description of the YouTube video. Breaking news coming in here in just a second. We've got our GDP numbers. All right, let's see what we get for advanced GDP. This is a big one, so let's see what happens to the dollar, see if it gets any movement. Only way it's going to generate movement is, of course, if it's something big surprise. So we have GDP for Canada. And look at this, advanced GDP for the United States actually showing some contraction compared to a 0.2% quarter over quarter growth. We actually saw a minus 0.3%. And let's see what's happening. Pretty flat there. See what gold is doing in response to that. Take a look at the indices. Look at that crazy candle on the NASDAQ. S&P 500, Dow Jones, big back and forth move. VIX, take a look at the dollar. Nothing substantial, actually. Not a huge move there. That is, to me, though, pretty surprising, considering that's a pretty good size drop. That being said, we did revise higher in the previous quarter. The employment cost index came in line. This is also a pretty good inflation indicator. The cost of labor is, of course, very important. It's an important input to inflation as well. Advanced GDP came in minus 0.3% compared to 0.2% growth. Dollar index in response to this is pretty mixed, not really making a big move in either direction. The NASDAQ back down towards session lows here, guys. We've got the 30-minute chart breaking lower as we speak. And that's a pretty appropriate response in my personal view, right? We do not want to see slowing GDP growth. That is concerning. Now, in some ways, that makes the likelihood of rate cuts higher. So this number, in my view, should actually support gold prices, which it seems to be doing, right? Slowing GDP growth is almost always a positive thing for gold prices. Does that mean we're guaranteed to rip higher for the rest of the day? No, right? Because new information is always kind of rolling into the markets. That's why, news gets everybody's attention for a little bit and then something else happens. But right now, the initial response here, prices kind of holding their moves this morning. So dollar index moved lower here this morning, right? Now just flat on the morning. Really not a big move in either direction for the dollar, but the NASDAQ makes a lot of sense. NASDAQ pushing lower here today off of this soft GDP number and coming right back into this area here. So I've been talking about buying the NASDAQ. Let me just clean up my chart here. So I really only want to see this on it's a cool little trick for you. You can actually make your certain indicators or drawings only visible in certain time frames. Just right-click an item. So I've right-clicked this trend line, visibility on intervals. I want to do only on the daily chart, current interval only for this trend line. So now when I go down to the 4-hour chart, you won't see that trend line. So looking at the NASDAQ, where am I getting long on this one? Well, we had this big kind of turnaround point on April 21st. So if I draw from swing low to swing high on this one, the point that I'm interested in possibly taking a stab on the NASDAQ based on the 4-hour chart, we've been consolidating up here. It's possible that we do see some further kind of pullbacks and downside move. If you get a move back down to the 38.2% retracement, I have a pretty strong reading on the edge finder currently for the NASDAQ to the upside, although that's going to lose some score once this GDP updates. We're going to lose some score on NASDAQ because of that, because we significantly missed expectations. With Friday's jobs report, we also have potential for scores on unemployment data, and jobs added data could significantly change as well. So we have potential score flipping stuff happening. One thing that kind of gives me some resolve, if you will, is the commitment of traders data still strong. Retail positioning shows put to call ratio still pretty extreme, or it was extreme, showing, sentiment still very scared out there, which is a contrarian bullish signal to me as well. Seasonally, it's a good time of year trend, trying to grind higher here, right? So we've got some positive factors that outweigh the negatives, even with a little bit of softness in the GDP quarter over quarter reading. A lot of times people say, well, but GDP came in and it missed. You'd still buy? Well, we look at things holistically here. We don't look at things just nothing. Like, this is a mistake so many traders make. They look at just the COT data, or they look at just seasonality, or they look at just the jobs report, right? Nothing, like, it's very rare that you get everything in line, bullish or bearish, all at once. And if you do, you know what the chart looks like? Usually it looks like this. It's either straight down or straight up. When everything's in line, there's very little pullbacks. So the choppiness in the score usually presents some pullback opportunities. So I think we could get some pullback opportunities off this GDP number coming in a little soft, especially with ADP. I mean, that's a double miss here this morning. You had ADP and advanced GDP come in soft. That likely gives us a pullback here on the NASDAQ. I wouldn't be surprised if we kind of grind lower here for the next day or so. And if we do that, that's interesting. That being said, I could totally miss the boat here on this one. Why? Well, let's say it goes down here, and then at 4:05 p.m. today, Meta releases their earnings. And let's just say Meta earnings are phenomenal. Boom, up goes the NASDAQ, up goes the S&P. Why? Because that's a huge company, and it's like an AI leader, right? So we have AI leaders producing their earnings reports this week after the bell. You have several big names. You've got Amazon. We had Google already. We had Tesla. We had Meta. These are big names. So keep an eye on those earnings reports, because again, I'm fully aware I might miss the NASDAQ trade by trying to wait for that move. And granted, I may also have the opposite happen. Maybe I do get my entry, and then Meta reports bad, and we keep going lower. I stop out, right? We just move on. We don't, again, people are so scared of a stop loss that it inhibits them from just taking proper setups. Like a setup is a setup. It's not a guarantee. And the second we can collectively kind of be like, okay, yes, we are taking a stab here, right? That's one of my favorite ways of saying, take a stab, take an attempt, try it, right? You're not going all in and this is it. This is your financial, reckoning or your financial breakthrough, right? That's not trading. That's gambling. So what I'm saying is NASDAQ comes down here. Okay, I take a risk here. I think the risk to reward looks okay. And, let's just say I take the trade. Everything looked good, and I put my stop loss below this kind of gap window point, right? Let's say that's my trade. And let's say it works. In that case, the risk to reward was obviously very good, and potentially we break higher, and great. But what if it doesn't, Nick? What if it stops out? Then so what? So what if it stops out? My position sizing, and hopefully yours too. For me personally, my position sizing, it doesn't freak me out if I take a stop loss. Like I have a gold trade right now that is kind of going against me. I'm not worried whatsoever. Like if gold stops me out, so be it. On to the next trade, right? What traders fail to do most of the time, they look at every individual trade very, very, with so much scrutiny, with so much pressure on themselves. They say, this gold trade's got to work out. Like I'm risking half my account on this, or I'm risking 10% of my account on this. They're risking way too much on one trade. Whereas really trading, you should be looking at your P&L over time, right? And who cares? Like as I'm drawing this line, think, does any one trade substantially make or break this sort of return? Like this is what we all want, right? We all want this type of return, something that has dips and valleys and all that, but over time it produces a positive return. That's what we all are striving for as traders. But what traders actually do is they do something like this, where every trade is doing this. And then what happens? They're risking so much that at one point, one losing streak, and they go to zero, right? Most traders can't hang simply because their sizing is way too big. It's like the simplest thing in the world. Trading is supposed to be boring, right? So if trading's supposed to be boring, what does that mean? That means your size should not be exciting to watch your trade. It is such a simple concept that took me a while to learn. But once I unlocked that, once I realized, when they say trading should be boring, it's not trying to convince yourself it's boring. It's actually boring. Like your size is so small relative to your account that you're like, I am not going to sit around and watch this today because this is so boring. That is so, like I'm telling you, I say position sizing. I'm so repetitive with that concept because somebody needs to hear it. And I know every time I give that kind of rant, I know in my head, I'm like that hopefully, if it clicked with one person in the audience today, that position sizing is the most important thing that you can control, I'll feel like I made a difference, because it was the biggest difference maker for me. The second I sized way down, my trading changed forever. Lincoln's got it right. Like, gambling it's fun, right? That's the thing. If trading is like fun, like the P&L swings are fun for you, I'm telling you, I get it. Just like I go to the casino every once in a while. I've never made money in a casino, and I know full well that I'm gambling. I have no edge, and I'm probably going to lose all my money. That's fun, and I know that. But when it comes to trading, I am absolutely not. I'm doing the opposite. I want trading to be so boring that I'm more focused. Like, I spend more of my time just like actually learning about the markets and studying what's happening. That's fun. I love that. But like my actual trades, my actual P&L for the day is boring. Except for like crazy days, like that big Wednesday day. That was pretty crazy, even with small size. Like the trade was so insane. The trades that were on were so insane just because of the move on the NASDAQ. But again, trading should be boring. Ask yourself what that really means. Like, really think about that. How is your trading boring right now? I know a lot of you, if you're honest with yourself, you're like, no, it's like really, really, it's got me highs and lows every day. If that's psychology, if psychologically your trading has you feeling up or down on the day, it's too big. It's simply too big. Christopher says it clicked with me. Thanks. Christopher, like, from my end of this thing we're doing right now, where I'm streaming and a lot of people are here, and maybe you've traded for 10 years, maybe you traded for 10 days. Wherever you are, I'm telling you, what I do on my channel, I've said it many times, my goal is to try and share what has genuinely helped me on my channel, because it's self-serving. I think it helps make my content stand out. I think it helps me sell more copies of my tool, to be completely honest, by simply being as real and transparent about what I've learned in this thing I've done for years, which is trading. And I think it's really, really important that I share that with you. I'm not making any of that up. Like, telling everyone in this stream to size down does not benefit me, but it is the truth, right? It does benefit me in a different way. It benefits me because I think people recognize that I'm telling the truth about this stuff. Like, from painful learned lessons over the years, sizing down changed my trading, I'm telling you. And for someone out there, they're going to take the next few months and they're going to size down their trades, and they're going to feel way more relaxed about what they're doing. They're going to start actually paying attention to the market and like learning about the market. They're not going to be fixated on if gold's moving up in the next 30 seconds or if the NASDAQ's ripping higher in the next hour. Like, instead of fixating on tiny movements that are happening every day, let's learn about, like, why is the NASDAQ on a 10 plus year bull trend? Like, what's like on a big picture, why is that happening? Or, they're going to go back test new strategies just for fun, right? Like, when you actually learn to love trading, that doesn't mean you love P&L moves. That means you love the mechanisms of like how the market works and why gold moves certain ways on certain reports and how GDP numbers impact certain charts, right? It's really, really a game changer. When you size down, you sleep better. Absolutely. 100%. And people don't like that conversation when they hear what that means. That means you're not going to double accounts quickly. It means you're not going to get rich quick from trading. Like, that's the side that people don't want to hear. They're like, oh, sizing down sounds much better. It sounds more relaxing. But then you tell them, oh, well, that also means that you're not going to make a bunch of money really quick from the markets. And then people don't actually want to do it anymore, right? But the people who do are more likely to actually end up making profits in the market over time, because they're more likely to survive the tail end events that happen in markets. Trading doesn't make you rich. It's supplemental income. The thing is about trading, right? Trading, investing, markets, they can make you phenomenally wealthy. It's just not how people think it's going to make them wealthy. People think it's going to be, I'm mastering these charts and I'm going to rip, 10x trades or 10R trades every week. And that's simply just not how that goes, right? It's a slow process. It's a compounding process. you can absolutely get very wealthy. Like, don't hear me incorrectly. I believe there's massive, massive financial gain from becoming a great trader. But a great trader is not a fortune teller. A great trader is a great risk manager that just knows how to slowly stack and stack and stack and build up accounts over years, not over weeks. I got some questions here loaded from you guys. Thank you very much for asking those questions. I'm going to pull some of those up here on the stream as we speak. If you have not thrown in a question and would like to, I've got about 9 minutes or so before our next guest joins the stream to answer some questions. If you'd like to ask one, we'll drop the link here in the chat to where you can fill out a form quickly to ask that question. NASDAQ, I'm watching for pullback to this 38.2% retracement. That is top of mind for me. Other setups that I'm looking at, like I said, looking for pullbacks on dollar crosses, Kiwi dollar, Aussie dollar. I really like Kiwi dollar. That's a trade for me as well, just not quite set up yet. Okay, so I've got some questions here. I'm just going to refresh my list, make sure I've got everything in here. So Dante, first question of the day, says they've been trading for 1 to 3 years. Their primary goal is other. They asked, using the COT data, what do I focus on week by week? Say I'm trading every day for a week, or looking for my setups every day in a week. What should my bias be? For example, pound yen. Could you use the COT data to tell me what this week's bias would have been? Thank you. Great question, Dante. So COT data, first of all, I've done a couple videos on that topic on my YouTube channel that I would encourage you, after the stream ends, go check them out. So if you search up on YouTube, like Trader Nick COT data, I've done a couple videos on this topic. I've also done some ultimate guides on the Edge Finder. I've got several resources for you to find out more information about this. So one of the big ones is, even if you don't have the Edge Finder, here's a link for you. So head over to this link. I'm going to drop it in the chat. And if you're watching and you'd like to explore the Edge Finder and all of its features, I know that sounds like a sales pitch, but honestly, like, even if you don't want to buy it, this link I just dropped in the chat, bookmark this or pull it up on your screen, save it somewhere, because we've done a ton of work on this page, going through all sorts of different economic reports that we've built tools for. But even if you don't buy our stuff, you might still just benefit from reading about all these different indicators that we've built. So under institutional positioning, right, you have all of your commitment of traders data. But like I said, even if you don't buy our stuff, you can still read an in-depth report of what we focus on, why our tools are built the way they're built, to get a great understanding of how the commitment of traders data looks. But the big story is this. This section of the COT data is long-term positioning. That's the way I read it, right? Long-term positioning. Why? Well, because the net positioning changes very gradually over time. Like the Japanese currency, the Japanese yen, was the most sold thing on this list like 6 months ago. In fact, I'll show you, for the example, the Japanese yen, institutions went from very short the Japanese yen. Very short. See this? This is short positions versus long positions week by week, right? We have this data historically plotted out for our users. So huge short positions on the Japanese yen. And then what happened? Watch this yellow line. See this yellow line? Around that August event. Anybody remember the August event? The big sell-off we saw in risk markets in August of 2024? The carry trade unwind? You thought that was over? Nope. That carry trade unwind was a theme that completely, like, the market went from selling the Japanese yen, institutions started buying the Japanese yen. And you might say, Nick, you're just saying that because it sounds cool or smart. You're just claiming you know what institutions are doing. If you're a new trader, COT data is not guesswork. It is not speculation. It is not trying to derive from a candlestick what institutions are doing. It is straight up what institutions are doing. This is why I love looking at it. So many people on the internet are going to claim, you know, you've got they've got some like magical way to claim they know what institutions are going to be doing in this current candlestick based on the way price action is working. To me, I find that to be nonsense, right? Complete nonsense. Candlesticks can be very deceiving. Time frames can be very deceiving. If you're looking at a 5-minute chart, like trying to derive what institutions are doing from an intraday candlestick pattern, in my opinion, is total nonsense and trying to read tea leaves. The COT data, although it does have a built-in lag effect because we get data delayed by a couple days, it is straight up reported positioning from institutional players at the table. In my opinion, of all my years of doing this is the best way I know how to track an aggregate level institutional positioning on your favorite charts. So if you're a trader looking to track COT data, this stuff is accessible around the internet, but I do think I'm a little bit biased. I think A1 has done a phenomenal job. Our team has done a remarkable job building some of the best tools to track this stuff in a simplified way. The CFTC puts this data out in a giant text file. So you can look at this stuff on the internet, and it's going to come in as a giant text file. What we do is we take that text file and our software extrapolates it out and makes it easy to read. So the Japanese yen, institutions have been buying the Japanese yen consistently, persistently, and aggressively for many weeks. So you asked about pound yen in your question, something to think about, right? What are they doing with the Japanese yen? I have several questions that I'm not going to get to today because I don't want to keep our next guest waiting. I've got 3 minutes. I'm going to rapid fire as many questions as I can. Hi, Nick. Well, my question is about the 10-year yields, bonds, and the VIX and the S&P. I've heard you talk a lot about them, and I don't understand how much of an impact and how crucial they are to the markets. Very good stuff. The two charts that you brought up are both very, very important. The 10-year yield tells you, in a nutshell, how bond market investors are feeling about the economy and about inflation. If this thing is trending lower, it signals one of two things. Either inflation is cooling and market investors think the Fed's going to cut rates, or it signals the economy is crashing and they think the Fed is going to cut rates to save the day, right? So this is a very powerful chart. When this chart is ripping higher, that's saying investors think inflation for the future is going to be higher, and or the economy is really strong and the Fed is not going to cut rates because they don't need to, right? Remember, the Fed usually cuts rates in one of two scenarios. Either they have to because the economy is really struggling, or because they can because inflation is cooling and cutting interest rates is an option to them, right? So the 10-year tells you a lot. The VIX also tells you a lot. These two charts are very, very powerful charts that many traders ignore. The VIX tells you the implied move in the S&P 500 in the coming days, weeks, months. When this thing's really high, people think the market's going to move substantially one way or the other. When this thing is very low, and again, I encourage everybody to add these things to your watch list. When things are very low, the market thinks that the expected move is lower, right? So the way we would use this is that, again, for me, when this I use it as a contrarian indicator. When everybody gets really confident and there's very low expected moves, things are very stable, I want to be cautious. And I want to be more aggressive on buying risk assets, especially when the VIX gets very, very high and people are pricing in massive moves. Usually big moves like this are expected when the markets are crashing, which is what we saw back in March and April, right? Big sell-offs, big scare events. Early April, we saw huge VIX spikes. So that's a way to read it. It's a very powerful way to kind of understand the market's psychology, both of the two charts that we just discussed, the 10-year and the VIX. Question from Prayer, who's been trading for 3+ years. Their goal is to learn more about fundamental analysis, and they already own the Edge Finder. Shout out to you. Congratulations. By the way, just while I'm mentioning this, just a heads up, our Edge Finder sale is currently ending very soon. We are coming to the close of our biggest discount of the year. A lot of new users picked up a copy of the Edge Finder during this event, and I just want to make a last call announcement. Edge Finder 45% off, the lowest price of the year, available for only a very limited remaining amount of time. If you do not have a copy of the Edge Finder and would like to pick one up before the sale ends, like I said, it is 45% off. It's the biggest discount that we do all year long. We're doing such a big sale event because it's the 3-year anniversary since we launched this tool to the public, and it's come a long way. So it's a lifetime access. You only pay once to get access. You don't have to pay every month or anything like that. And it's currently almost half off. Like I said, it is the lowest price that we're going to do all year long. So don't miss it. If you've thought about that, best way to get access, just send us a direct message on our website. Head over to a1trading.com. You can use the live chat feature in the bottom right hand of the screen if that's something that you're interested, and speak directly to a member of my support staff. Okay, so that's going to be it for now. I've got to, if I missed your question, don't worry. Someone from our team will follow up with you over email and let you know the answer to your question. They have been asked to do that in response to ones that I miss on the stream. So I'm going to pass over the stream to our next host. We've got Trader Tom from Simply Forex taking over for a little bit. He'll be taking over the stream just after this quick break. Stay tuned.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello traders, how is everyone? Hi Trader Nick, everyone at A1, hope you're all well. Trader Tom here from Simply Forex, and I'm with you for the next 30 minutes or so, guys, all right? So don't be shy, ask as many questions as you like about trading, right? And my background, guys, I'm a technical trader, so if you want me to analyze any pairs from a technical point of view, then I'm happy to do so. I'm going to show you a trade that I'm currently in. I'm also going to show you my trade ideas that we were looking at today. And we're also going to do a bit of an in-depth look at the US dollar, right? Because that is weaker than a wet paper bag. But are we starting to see a bit of a rebound with the US dollar, right? And we've got some telltale signs, right? So we'll look at US dollar as well. But guys, right, these are my trade ideas for today, right? And there's a theme, right? And the theme is Aussie dollar weakness and New Zealand dollar weakness, right? And a bit of pound strength as well, right? And this strength came in yesterday. And so it's important to point out that I am an intraday technical trader, right? So I'm looking to be in and out of a trade within a day, maximum 2 days, right? And all of these trades are my trade ideas. Obviously, I'm not going to trade every one, right? That would be mental. And they're all highly correlated, right? But I couldn't get into these guys because there was just such big news coming out, right? Although they went in the direction we expected. And the same with Canadian dollar. We had GDP coming out from Canada. So I actually got into a pound Aussie dollar trade and a Euro New Zealand buy trade. So we're just going to look at one of these examples and understand why, right? Why I entered it from a technical point of view. Okay, so what I'll do, guys, I will start with the day chart, right? Let's remove all these trades now, right? So I will start with the day chart. And as you can see, right, this is in an uptrend. So I will just look at the facts of the chart. Right? And the facts are this: we're in an uptrend, right? And then prices retrace to this important support level. And then we've just had sort of disgustingly crap price action, right? Just prices contracting, right? No winners, losers. It's just not much happening in here. But yesterday we got this nice bullish candle that broke out of this choppy price action, right? And I would suggest we can potentially take price. I would aim for this high, maybe leave some profit to run, right? So the daily chart tells me I can buy this market, right? And then that's what I use the daily for, just purely for direction, right? And then I will look at the H4 for an entry. Okay, so if we look at the H4 now, okay, we've had a nice last candle as well. And then with the H4, I'm just looking for trend, right? And as you can see, H4 is in a uptrend, right? We've got a nice pullback to the moving average 20. And then we got a nice bullish candle, right? This candle here. And it's as simple as this, right? I entered here, started buying the market, put my stop below here, and this is my target, right? I'm looking for 1:1. I will take some profit if we hit profit up here, right? I'll take 80% profit, and then I'll let 20% run. All right, so that's how I look at the market. Very simplistic, and based on price action, right? And price action is, made up of structure and trend, support and resistance, candlesticks, and this concept of value, right? And that's it, guys. So pound Aussie dollar, I'm in this trade currently, all right? And then also, I wanted to take a real good look at the US dollar as well, right? Now, a good place to start with the US dollar is the dollar index. And I'm going to look at the monthly chart, right? Because this is really interesting, right? And the dollar is a bit like the point of no return for the US dollar. And we know Trump has been hammering the dollar. It is super weak, right? But I want to look at the monthly chart, right? I don't trade the monthly chart. I trade intraday, right? But what I want to show you here, guys, is this $100 level, right? This big blue line here is the $100 level. And that is obviously a very big psychological level for the dollar, right? And because of that, it obviously becomes very good support and resistance. And in this case, it's become very good support, right? Since Jan 23, it has never broken below the $100 level, right? It's flirted with it, right? But it's always closed back into this level, right? Now, it's going to be, we literally today will see this candle finish, right? This is what makes this monthly candle even more interesting, right? Now, are we going to see the US dollar pull back into this level, right? Even if we ended up with a candle that looked like this, right? We have a bit of a wick. Excuse my candle, I've been drinking. I haven't really. But if we got a bit of a candle like this, but just had a bottom wick that closed back into this $100 level and this support level here, right? Then I would suggest, perhaps we can start seeing some US dollar strength bounce off this level. Now, if this monthly candle finishes like this, then no, that is not the case. That is a monthly break of structure, right? And that would suggest further room to the downside, right? It'll probably retrace, but then further room to the downside. So I just wanted to show you how much of a pivotal level the US dollar is at. And obviously, we've just had ADP, we've just had GDP figures, and they were all pretty much negative for the US dollar. And what will be really interesting is if the market just ignores that data, right? Because the market is very conscious of this $100 level. So how this candle finishes today, let's go back to the daily candle. How this finishes today will be very, very interesting, right? We've had bad US dollar data, we have, but could it push back up into here? And if the US dollar ignores that bad data and we still get a strong US dollar, then, is this the point where we start to see some US dollar strength? Now, again, guys, how I trade is all about confluence, right? And if you look at any of the US dollar majors, right, let's start with US dollar yen. Let's go to the weekly chart. They are all at, pretty much all of them, are at key support and resistance levels, right? Look at US dollar yen. Look at this key weekly support level, right? And look at that weekly candle that we had bounce off that level, that tells me potentially US dollar strength, right? If we look at pound US dollar, right, weekly chart, we are at a key weekly resistance level, right? We're already starting to see some top wicks. Yeah. Will this US dollar strength continue? Right. So US dollar is sort of at the point of no return. Will it hold on to that $100 mark and we start to see some US dollar strength come into the market? Or are we just going to see further weakness? Right. And today I would say is quite a pivotal day because it's the end of the month, guys. Right. So yeah, just wanted to share that about the US dollar. Right, guys, have we got any questions? Would you like me to analyze any currency pairs, indices? Okay, all right, so I can see we've got a few things coming in. So let's have a look at the Dow Jones. This is for Saeed. Let's have a look at the Dow Jones. Now, obviously, we've had the, the maniac that is Trump just totally, manipulating the markets, right? We had this massive sell-off on the back of tariffs. Then we said, oh no, the indices are dropping like stones. I better put a 90-day pause. And the markets reacted bullishly, obviously, right? And this is the state we find ourselves. I'm actually going to put a level through here, guys, right? Because you can see there's a level through there, right? Now, if we just look at this from a technical point of view, right, on the weekly chart, we are in this downtrend, right? Clearly, right? Lower highs, lower lows. We're in a downtrend, okay? But we've had this huge bounce off of this level. And we're at an interesting level for the Dow Jones, right? This is potentially an area of resistance, okay? Now, because we're at a level of resistance, it doesn't mean I just want to sell it in a downtrend. Far from it, right? There's more things we need to consider when we trade. And you can see a big bullish bad boy candle, right? That's what I call them, right? But that is a big bullish candle. That is a big bullish candle, right? And we're feeling buyers and confidence come back in. Right, there's still so much uncertainty, and a lot of it will be to do with, the America versus China tariff battle. How, if that continues to escalate, right, we might see some more selling, right? But if they come to some kind of agreement, we're going to see more bullish indices, right? But from a technical point of view, we're at a resistance level, but I don't want to sell it, because we have so much buying pressure here, right? Now, also, guys, we're going to take a look at daily, but before we do, let's have a look at the monthly as well, because I always like to look at the monthly chart when the month is going to end, right? And if we look at the monthly chart, really the last significant low through here, right, is this level through here, right? That is the last significant area of support and resistance, right? It was once resistance, it was once support, right? It's no coincidence that we get a reaction at that level, right? And looking at the monthly chart, right, you would suggest this is trend. We didn't break these lows and we've got a nice big bullish wick. Right, this would say, okay, no problem. We can continue to buy the indices, right? And like I'm saying, I'm talking from a purely technical point of view. Trump could open his mouth tomorrow, or China could react, and we see this, right? But from a technical point of view, it's looking like a strong buy trade, right? And it's also, if it closes above the moving average 20, it's held on to, dynamic support as well. So it's tricky, right, at the moment. Yeah, if I go back to the weekly, we've got, so the monthly's very let's buy, right? But the weekly there's contradictory information, right? We're in a downtrend, but we're getting very bullish candles, right? But we're in a downtrend. So this contradiction is difficult to trade, right? What you might find is we just get a lot of sideways crappy price action until the market is confident to carry on, or fear creeps in and it carries lower, right? But let's have a look at the day chart. And yeah, as you can see, guys, there's a really important level here. Now, technically, right, if we break this level, again, I think we have room to the downside. If we get a bearish reaction at this level, right, I would suggest we have room to the downside. And again, I'm an intraday trader. I would trade either one, right, depending on what the candles tell me. But again, let's look at it technically, right? So this is in a downtrend, right? But all of a sudden, we've got a new higher low, right? We're getting lower highs, right? And this high is holding. But are we starting to see higher lows? So indices are really interesting. You can feel the uncertainty in the indices, right? But if we break, this level, I'm looking for buys. If we get a very bearish, strong reaction here, I would consider selling this market. All right, so I would just let the market tell me what to trade. Right, guys, what else are we looking at? Okay, right, we've got someone here looking at Aussie dollar, US dollar. Right, let's have a look at Aussie dollar, US dollar. Let's take a look at another US dollar pair. So obviously bear in mind what I said, guys, about the US dollar earlier on. And this is no different, right? This is at a key level. And one of my trade ideas for today was to sell Aussie dollar, US dollar, right? But let's understand why. And also, guys, if you're enjoying my analysis, please don't forget to subscribe to my channel, Simply Forex, right? Come join us. We would love to have you. I can see the guys have put the link in the live stream. So please come join us. We would love to have you. So Aussie dollar, US dollar, right? Let me zoom out so you can see this level, right? You can see this level. You can see price has reacted many times at this level, right? That is a good level of resistance. And then if we just follow weekly structure, right, we are still in a downtrend. We're getting lower lows and these highs are holding, right? Again, I'm just dealing in facts of the chart, right? This is not me making things up. That is what the chart is telling us, right? It's in a downtrend and we're at a level of resistance, right? And at this level of resistance, surprise, surprise, right, we're getting sellers. Look at these candles, right? Obviously, this weekly candle hasn't finished forming, but we're getting sellers, okay? Now, if this weekly candle finished like this, I would suggest we can sell back down to the next piece of support, right? But let's get more information, right? I don't trade the weekly chart. I just use the weekly to give me as much info as possible, right? And then if we look at the day chart, let's get some more information. And again, no surprise, at this resistance level, you have got contraction in price, right? You've got all of this buying pressure. Yeah, remember all of this US dollar weakness. And then as soon as it hits a resistance level, it just becomes contracted, right? We don't know, who's winning, buyers or sellers, right? It's just become contracted price action. But you can see, guys, every time we reach the top of this level, we get big bearish candle, big bearish candle, big bearish candle, right? This level is not breaking, right? And we got this big bearish daily candle. So that is one of the reasons I was looking for sells today, right? The other reason, okay, is we've literally just had a break of H4 structure as well, right? So if we look at H4 structure, you can see we have broken down, right? We've just broken these lows. However, we are into a lot of support down here, right? And it will be interesting to see what happens in here. You know, we was actually looking to sell it from in here somewhere, right? But we wait for a bearish candle, which we got, but then we had news coming out as well. So I couldn't enter this trade, right? But news has pushed this down, right? So yeah, really interesting levels for Aussie dollar, US dollar as well. Just the dollar in general. If we go back to the day chart, if we start breaking this low, right, because that's the only last serious low that we can see, right? You can't start trading this one. But if we get a big red candle that breaks these last lows, then Aussie dollar, US dollar is a very nice sell trade. And it has some nice room to move into. But yeah, let's see how that US dollar finishes today. Right, what else are we looking at? Gold. You are gold. Anyone remember that song from Spandau Ballet? Okay, so people want to look at gold and people want to look at oil and silver. Right, okay, so let's take a look. Right, now, gold. Again, let's start with the weekly chart. Right, now, every man and his dog, right, wants to buy gold, right? It fundamentally, right? I'm not a fundamental trader, but I'm obviously aware of fundamentals, right? I'm a technical trader. But fundamentally, gold has been a super duper fundamental buy trade, right? It's a flight to safety, and the economies have been going to poo. We've had wars, right, in the Middle East, Ukraine, Russia. We've had central banks buying up bullion like there's no tomorrow, especially China, right? So there was lots of reasons to buy gold. Also, the Fed, you know, saying it's going to reduce interest rates later in the year, making the US dollar weaker, right? There's loads of fundamental reasons why gold is strong, right? But, right, from a technical point of view, if you look at the weekly chart, and I said to you, right, I'm going to buy gold, you would be like, Tom, why are you buying into this big bearish candle, you maniac? Right? From a technical point of view. Okay. Now, it's very hard for me to buy into that candle. Okay. It literally touched this big 3,500 level. And look at the reaction we've had. Right? That is a big psychological level. Now, the last time we had a big bearish candle, it reached the next level of resistance and therefore support, right? It reached that and then flew off, right? Now, we have this big bearish candle again. The next weekly piece of support is really here. This was the last piece of resistance. You know, I would suggest selling gold back down to this level, right? And then looking for buys. If you don't want to sell gold, then wait for the retrace, right? I would say there's a deeper retrace to come. And this again plays into that idea that the US dollar is at that $100 big psychological level. Can we start seeing some US dollar strength from there, right? And this plays into this gold trade idea, right? So that's what I'm saying. It's very overextended, right? And it has been for weeks, right? And it still went up, right? I'm not saying you can't trade it when it's overextended, but what I am saying is I don't want to buy that candle. I would expect a retrace and then we can buy it, right? But again, let's get more facts, right? Let's look at the day chart. Now, the day chart paints quite a different picture, right? This is suggesting right now, I mean, if we just follow structure, right, this is where we're at, right? We're getting higher highs. Are these the new higher lows, right? Now, we can see there's an area of support here with gold, right? And price keeps bouncing off this level. There are buyers sitting in here, right? Now, for me, I'm not interested in buying, yeah, because of that big bearish weekly candle. So no matter how bullish this candle is, I'm not really interested in buying gold. Although if you are, this would be a very good level to buy gold from if we get that bullish reaction. But if we break this level, yeah, as I explained on the weekly, I think we have a little bit more room back down to this level here. And I would actually look to sell gold. But very interesting level right here for gold. Yeah, this will tell us a lot about the direction, right? If it breaks it, it's coming lower down into here, potentially further. If it holds, then we can push back up, right? Back up to these highs. So yeah, there's gold. And silver's very peculiar, right? I mean, gold and silver are normally highly correlated. But if you look at the gold chart and then you look at the silver chart, right, they're very different right now, right? And silver, again, this would be a better buy trade for me than what gold would be right now, right? Now, again, if we look at silver, we are in a weekly downtrend, right? Fact, lower lows, right? These highs held, right? So is this the area where we start to get new lower highs, right? If we get a big bearish weekly candle here, excuse my candles, that is probably one of the worst candles I've ever drawn. But if we get big bearish weekly candle here, that would suggest we can come lower, right? Down to this level, if not a bit further. And that would play into that gold retrace idea as well. But for that to happen, right, again, if we just put this level through here, like gold, we are at a key level, right? But for me, silver doesn't have that big bearish weekly candle. Now, if we got a nice big bullish reaction off of here, right, I would be willing to buy back up to here, if not a little bit further, right? But equally, if price broke this level, right, yeah, and we broke daily structure, I would be willing to sell silver. I would sell it down to here and then potentially back down to here. All right, so like gold, silver is at a very interesting level. I'm going to let the candlesticks determine what I do here. And finally, guys, I've got a couple of minutes. Let's take a quick look at oil. Oil is just a real tricky little sausage to analyze at the moment. So this is why I look at multiple time frames, right? Now, if we look at oil, we know because of old Trumpy baby, right? He made oil bearish, right? It was like, right, we're going to start pumping. He's like, I'm going to speak to Saudi. I've got to get them to reduce their oil price, right? It led to oil weakness, right? But you can see price was building up. And then on a daily structure, it's broken back down. It's broken that low. It's even broken that low, right? So looking at this, oil is very much a sell trade, right? Back down to potentially these lows. Now, from the daily point of view, it's very difficult to argue that, right? But if you look at the weekly chart, again, this is the problem we're having with a lot of assets at the moment, right? If you look at this big, like totally oversold down here, but if you look at all of this buying pressure and this candle, even this candle to an extent, there is a lot of buying pressure, right? So do I want to start selling oil back down into here? No. Do I want to buy it? No. Right? So I'm not interested in oil at the moment for those reasons. You've got real contradiction weekly against daily. Yeah, so there you go, guys. Yeah, hope you've enjoyed my analysis, guys. Don't forget to subscribe, and I will see you next time.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey guys, how is everyone doing? Hope you're all well. Happy Wednesday. Let me just move this over a little bit. There we go. Sweet. Yeah, happy Wednesday. God, it's hot in the UK today. Sweating. Shells, Bashi. Hello, hello. Okay, so open positions. Still got Swiss yen open. This is a bit of a pain. It's just sideways moving, really. Came into some profit. We've had some drawdown. It's just been very, very bland, very boring. Euro dollar did take a long on this one, just hedging a little bit. Not hedging, it's not the right word. Just sort of seeing if we can get euro dollar to continue higher, see if we can get the US dollar to continue to basically drop off a cliff. I'm not super confident in this idea, to be quite honest with you. I do have Euro New Zealand. This trade is risk-free, and to be honest, this was a bit of a cheat, really. It wasn't even my trade. This was from MUFG. So we got a report saying that they're recommending a new long on Euro New Zealand. I decided to just copy and paste it. Basically, I'm not going to lie to you. And yeah, so far, so good. Now, Euro Pound actually was my work. I'll take credit for that one. This one, very, very simple. 50%, well, actually, a 61.8, a 0.618 pullback. Just looking for a 1 to 2, nothing too huge. The trend is still bullish. Again, fib pullback seems very, very straightforward. We did have an oversold RSI. The fundamentals for the euro, although I'm not super bullish on the euro, I would say that the euro has more steam compared to the what's it called? The pound. That's the word. And that's mainly driven by outflows of the dollar, inflows into the euro. The euro is the next liquid asset from the dollar. So when we see liquidity flows come out of the come out of the dollar, generally we'll see the euro benefit from that. So that's the thought process behind that. Very, very simple, very straightforward. The watch list is very slim. I'm not really looking to take anything else, to be honest. Dollar Swiss was one I was watching. I think it's on the Edge Finder as well. Let me just double check. Yes. Hold on. Let me pull this over for you so you can see it. Here we go. So yeah, dollar Swiss -8. So I think this is probably the only trade I'm actually that interested in. There's really not much else that's interesting me. Silver, I'm not in this position. I was looking at it. Seems quite good. I still like silver to the upside in the long term. I think it's still very undervalued. I've been saying this for a while. I think silver could easily head towards $40. But it's more a case of just waiting. I wouldn't want to buy silver where it is right now. To be honest with you, I'd be quite happy to buy silver if it comes down towards 28 or $28. But other than that, yeah, just not too bothered really, especially with the risk sentiment changing. Risk seems to be a little bit more on at the moment than off. So yeah, buying commodities or specifically precious metals isn't in my plan right now. Gold was another one. I was looking to buy gold with stop loss here, looking for about a 1 to 1.5. But also, again, it's the same idea because we've got risk calming down a little bit. Can't justify buying gold right now. We do have the 90-day pause on tariffs. It seems like there's hope that we're going to have a trade talk between China and America, but yeah, it's just not something I want to be involved with right now. Excuse me, as I said, it's really hot here, so I have to keep hydrated. Oil. Oil's interesting, not because of the chart, really. I mean, the chart's quite nice. I was looking to go short on this fib. I didn't do it because I didn't have really enough of a reason to. And I'm not sure if Nick's pointed this out. One of my viewers did in my stream this morning. The put-to-call ratio on oil spiked massively. I'm not sure if this is a bug. I'm not sure if this is real. I don't know. I really no idea. But this is huge. This is a huge move to extreme fear on oil. And it seems strange to just happen for seemingly no reason, as far as I'm aware. So that would be a signal to possibly go long on oil, actually. I'm not. It's not. I don't want to do that. But if you like to trade contrarian and you've got already some sort of bullish idea on oil, that might be your signal to possibly get into it. NASDAQ, potentially also a nice long position. If we go back to the Edge Finder and we look at the NAS, our good old friend, we are still at extreme fear. Not as much as we were yesterday. Was it yesterday? Yeah, yesterday. But it is still quite above. So it's a little bit of a bullish sign there. We've also got the NASDAQ here with a bullish reading of 8. So that's another little confluence. So NAS might be one to look to buy. In my situation, normally I would use a fib here. And it does look very good because we've still got this market gap that's open that I think should get filled at some point. When I say should, there's no guarantees. You know, that's just not how trading works. But I can't really see that just getting left open, to be honest with you. The only other thing is that we are at the 200 and the 50 EMAs that look like they want to cross here, along with previous structure. So it's very possible that this is going to be just a very simple break, which we've had, and then the retest, which is here, and then continuation higher. So I am looking to buy the NAS, but it is just a case of waiting. If we could see some sort of bullish reaction here, whether it just be a bullish candle close, wick rejection, if we can just see something here, I might look to go long. But at the moment, just can't do it. Finally is dollar yen. I think dollar yen remains one of the best short positions there is. It's just tricky because it's too low for me to sell right now. I would be quite happy to look for sort of 130 to 135 as profit targets. But again, I just can't justify selling it here. I know, actually, let me just double check. Who is it? Danske Research has a sell limit on dollar yen at 145. 145 on the dot, the cycle level. So go like this. So they've got sell limit there. The take profits down at 130. Actually, again, let me just double check. Yeah, the take profits at 138 and the stop loss is at 148. So let me just mark this up for you. So take profit is 138. Stop loss is at 148. So this is Danske Research's position. It is a sell limit, obviously. So this might be something I'm interested in. If we can see price pop up to that level, I might consider an execution low risk and just see if we can get it. I'm still happy with this idea of sells below 150. There is no real reason to go long dollar yen right now, as far as I'm concerned. Okay, right. I've run through the open trades on my watch list. So let me have a look at the chart and see what I've missed. Let me just see here. James, I come back from a run. It was 25C, 25 degrees. Was it? Is it really that hot here? Let me just double check. I need to verify that information. It's 22, which is quite high for the UK. Tan darker by 2 shades. Yeah, I think I'm going to. I need to get out of this office. After this stream, I'm going to the pub. I'm going to get some drinks and have a cigar and do nothing. Sean, you still bringing out the intellectual thing? News tomorrow for Japan. Shells, you're right, actually. I don't want to do... I do apologize to the A1 guys, but this isn't meant to be self-promo, but it is going to look like that. I'm not going to go through it just yet. But if you want to join our free Telegram, I put a full breakdown of the Bank of Japan rate decision in the Telegram. It's free on the Elite Traders website, so you can join that. There's no cost. But that breaks down basically the situation and what we're expecting. But yeah, I might cover that shortly if we run out of things to talk about. Actually, I probably should cover that first because it is a trading stream at the end of the day. So yeah, we do have the Bank of Japan rate decision Depends where you live. For me, it's really early tomorrow morning. It's like 4 a.m., I think. So yeah, I'm not staying awake for that. No chance. I'll just deal with whatever the result is. I would expect to hold because wage growth is pretty stable. Core inflation's holding stable around 3 to 3.2. We're not seeing a huge decline in wage growth or a huge rocket in inflation. And we've also got trade tensions still on the table. So I think it's pretty reasonable to expect the Bank of Japan to just hold rates at 0.5. I wouldn't expect them to hike well, they won't cut, but definitely wouldn't expect them to hike today or tomorrow. James hit a curveball. Check out Coco. Oh, Coca. Oh, wait, how do you... okay, Coco. Do you want Arabaka, or we'll just do cash futures or contracts? What am I looking at? Ball out. You've always got some source for me, but I need some help in hand here. Are you looking at this? I know you don't like support and resistance, but we'll call it this the support for argument's sake. Are you looking at this type of thing here? I don't know. You're a bit more intelligent than me when it comes to commodities. Hold on. What do you mean? Red string theory with James? What does that mean? Shows if you're cyberbullying me, I'm not going to be happy. I'm really behind on the chat. I'm sorry, guys. I was just looking through my watch list. I didn't mean to ignore you. Shows, yeah, 22 degrees is hot in the UK. This is like t-shirt, shorts, get in the pool type weather. This is a treat. James, what does it mean when a bearish candle makes no wick up or down? Absolutely nothing, Laura. It is meaningless. The only things with candlesticks that I ever really look for are very, very few things. So here's a quick breakdown for you. So I'm looking for wicks. So I'm looking to see, is there a consecutive rejection to the upside? So here we can see there are 3 wicks. We've got 1, 2, and 3. 3 wicks to the upside. Failure to break higher signals to me that sellers are in control, or at least sellers are stepping into control. We've got a very weak body here. We've got an engulfing candle here, and that's pretty much it. I'll be honest. I really don't care about if there is a wick, if there isn't a wick. It doesn't change that much, to be honest. Remember, candlesticks are just showing you buying and selling in history. Yeah, really isn't that huge of a deal. 22, like a mild spring sunny day. It's not hot. Lee, I think you're a bit too privileged. All right, it's 40 over there. Schultz is saying it's not that bad. All right, I'm sorry. I'm sorry I grew up in a miserable country where the weather's cold most of the time. Is that a Donvo stop loss, James? What do you mean? Where? Go whap out that Donvo strategy now and again, though. Oh, any update on US dollar CAD? No, not really. I don't really, it's not on my watch list. I've got no interest in it. Sideways moving. Oil sold off as well. So I've got no interest in buying the Canadian dollar, but I've also got no interest in buying the US dollar. So it leaves me in a position where I've got no care in the world for dollar CAD right now. It's 9 degrees for Alan. Crazy. It's a Gen Z things. It means invisible connection. Shells, are you Gen Z? Crazy. You're on A1 instead of Trader Nick channel. I think I'm on both. I think the live streams are on both platforms, are on the A1 and Nick's. Unless I've been benched and put on the sidelines on the A1 channel. I don't know. You're a millennial. Okay, Schultz, I got a bit worried there. I was like, oh, God. Gen Z. Okay. Right. Markets. There isn't anything of interest. I'm going to be completely honest with you. I'm still pretty much sat on the sidelines. I can give you a quick update, though. So I've started a funded account with Funded Next, just seeing if dollar cost averaging can work. So far, so good. We've got a almost 90% win rate, almost a 2% return, $900, and we've had a lot of I've had a lot of trades, 37 trades. Obviously, again, it's just DCA trading, so high win rates is expected. But I thought, you know what? If I could pass a funded account by dollar cost averaging, there's nothing stopping me just going full margin on a 200K account and just, full port the whole thing. If it works, I can get like a 50% return. If it doesn't, what am I losing? $1,000 on an account? It doesn't matter that much. So that's the theory behind it. Might be able to bankrupt a prop firm by doing this, but yeah, who knows? It might go south. Oh wait, actually, I got distracted. What I was going to show you was this. So long term. Actually, let me just. There we go. Let me do this for you. As always, feel free to screenshot this. I've got no problem if you want to steal my information. Long-term downtrend for the US dollar. As far back as Q1 2023, we expressed a view on the US dollar bull run that commenced in 2011 had come to an end based on the Fed's advanced economies. US dollar index hitting high in September 2022. While the dollar advanced back towards those levels on Trump enthusiasm, we maintained that the record long USD bull run has now turned into a medium to long run depreciation of the dollar is underway. This may be exacerbated by Trump and the associated uncertainties and damage to trade. I'm not going to read all of it, but you should get the idea from that. That's from MUFG. So again, from an institution, we've got unusually strong real money Euro US dollar demand amid questions around Fed independence, only slightly offset by hedge fund profit taking. Actually, that brings me to a point. I think the euro dollar is really overvalued. I forgot to mention this earlier. But yeah, I'm not happy with the price in euro dollar. And obviously, the markets are always right. I'm not saying they're wrong, but I think if we're looking at the euro from a fundamental view, what does it have? Well, in my view, not much. There isn't that much of a support for the euro. I would say it's pretty much just driven by liquidity flows liquidity flows from the dollar into the euro. So if we can see the dollar start to pick up, and we can see some, I'm on the wrong chart here. Hold on. Why is dollar CAD there? It should be the JXY. Yeah, so if we can see bulls step into the dollar, which wouldn't be a shock because, if we look at this on the higher time frame on the monthly, this is a huge level of previous resistance turned support here. We were at the 0.618 on the fib from low to high. So, is it really a silly idea to think we could get possibly a pop higher before we come lower? I think that's quite a reasonable idea. So yeah, euro dollar may be slightly lower before continuing higher. But yeah, I think for now, euro dollar shorts are actually quite a sensible idea. I am long, as I said. It's a little bit of a hedge because I'm taking short-term short positions to offset that risk. But yeah, we'll trying my luck with the swing long. Bull out thinks EU to 1.19 and 1.24. Yeah, there is. Let me just confirm. Here is it. Bank of America are long euro dollar with a target at 1.18, and we have got Morgan Stanley that's long on euro dollar to 1.2. So institutions are on the same side, ball out. So that's a nice little thing, a nice little confluence. DXY to 95, it won't pick up before then. Fair enough. Me lift heavy things, Bassy Smash. To be honest, that actually does sound a little bit like Bashy. That's why, like 9 out of 10 times I see him in the chat, there's some sort of violence being spoken about. Ball out, you are the institution. Not a surprise. We've got balloutcapital.com or ball out investment wealth management firm in New York or Wall Street. Okay, let's see. I think the indices are giving potentially quite a nice long opportunity with the shorts. The mini sell-off we're seeing here, if you want to call it that. I think NASDAQ would be the best play that I have at the moment. I don't actually, DAX has just had the cross here indicating a trend change. If we can get the DAX to come down into this moving average, I also think a long position could be good. But again, we've still got this gap that I do really think should be filled. But, you know, think is irrelevant. It's about what happens. But I would be very cautious about buying until we have the gaps filled. The US 30 or the Dow has actually filled the gaps. That might be the play, actually. Yeah, we'll see. James is your head trader. You know, Bashi does sound a bit like a Mario character. It's like, was it Bowser? That big turtle thing with the spikes. DAX paying bills today. Yeah, I've got to say, if you've been short today, you'll be in the money actually, especially if you're session trading, sort of scalping sessions. Should have been quite a good day. Bullish going the edge find for Australian dollar Swiss. Do we? Let's see. Oh yeah, Australian dollar Swiss. It's only a 6 though. Do we like a 6? Maybe. Depends what the personality's like. I don't know. I've said it before, but I think the only technical justification I have for this would be to take a long position looking for a correction of this left side traffic. We do have a really nice level of structure here that I think could be tapped into again. I mean, yeah, I suppose we've got an uptrend here as well. I don't know. It's not for me, but I could understand why someone would go long there. It doesn't get me very excited. You know, Bola, I was very similar, editing and being on camera and making videos and stuff. I hated it. I ran Elite Traders for about 4 years and didn't put my face on camera once. And I decided, you know what, I should probably just do it. Yeah, Bola, you did buy the Edge Finder, but you didn't use my code. So I'm still a bit salty about that, you know. For anyone that doesn't know, you can use code ELITE and you can put some money in my pocket. It will go to the James Foundation. The James Foundation proudly supports 2 cats and drinking, and that's about it. Yeah, Paul, it's all good. Don't worry. I'll forgive you this time. Okay, right. Let's see what institutional is doing. Yen long. I'm not sure I'm very happy about that though. I think the yen's a little bit stretched. Long contracts, reduction of shorts. Yeah, net position is still bullish. AUD still net bearish. Increase on longs and shorts. Oil actually still net bullish, which is interesting. Huge short contract reduction. Actually, that's interesting. Yeah, I just can't buy it. I just don't. Yeah, can't do it right here. I think maybe if we come into this level of support, this previous low, I think that would be quite a nice place to buy. So that might be one that I'm going to keep interest in, or keep an eye on. Sorry. What else we have? US dollar shorts added, minor longs added, net short though. Gold, interesting. Gold's had what seems like profit taking. We've had longs a reduction in longs, increase in shorts. Net position is still very, very bullish, but this is an interesting sign to pay attention to. As I was saying at the start of the stream, I think it was the stream, not sure, but yeah, gold just doesn't seem very appealing right now. I've got a bad feeling about it. News at 3. What news do we have? Oh, we do. So we've got, yeah. How much do we have? Let me just actually clear this up a little bit. Let me just put the dollar on, just so we, let's get rid of low impact as well. Okay, there we go. So we've got PCE month on month, PCE year on year. We've got pending home sales. We have got PCE and PCE. We've got personal income and personal spending. So we've got 8 minutes until we've got the big news. Thanks, Bashi. I would have completely forgotten about that. I would say Bashi, actually, it does have one good use, which is a pretty nice alarm clock for news. No offense. On a side note, I've been on a medium steak diet. Gross. I saw a doctor on I think it was YouTube or TikTok or one of those things, talking about those meat-only diets. And a lot of the guys that are doing it are getting like they're getting fat stuck in their veins. It looks disgusting. Is it fat or no? Sorry, cholesterol, not fat. Yeah, disgusting. Okay, so we've got 7 minutes. So previous for PCE year on year was 2.8. Forecast is 2.6. So we'll see. Let me just actually take a look at that. I've not really checked what's going on with the dollar today. Let me just take a quick review. Pretty much nothing, actually. Yeah, just sideways. Okay, well, there's nothing interesting there. Not true. Well, I saw it ball out with my own 2 eyes. I know I'm Asian, but please don't be racist. I can see properly. Yeah, there's not that much else. Pound New Zealand. Nice. Euro New Zealand doing well. Euro pound doing well. Wow. I can pay rent today. Beautiful stuff. Carnivore diet's the way to go. Oh, no, you're lost on the social media, the TikTok thing. Just eat some veg, some protein, some carbs. You'll be okay. You need a balanced diet. Don't go into all of the red pill, raw meat, useless stuff. You know what? I saw a guy eating raw chicken on Instagram Reels the other day. I was like, I've lost all hope for people. Bit of broccoli, a bit of chicken, a bit of potatoes. You'll be all right, and a bit of chocolate cake after. Yeah, but that was my bad. It wasn't fat. It was cholesterol. But yeah, it looked horrific. Was he a wolf? Well, he was one of those ones. You know, the Andrew Tate type of skinny guy that thinks, you know, he's going to eat raw meat and become a multi-millionaire with a Lamborghini or a Bugatti. I like to eat tree bark straight off the tree. Chandler, I do too. Although apparently plants have nerves and nervous systems and all that sort of stuff. So I think that's actually really inhumane, Chandler. So I'm not sure I can get behind that type of activity. Cholesterol is a false flag. Oh, we've turned this into a health stream, not a trading stream. My apologies. Sean, I cannot read the last word that you just put in that sentence. Trigil. I'm not even, yeah, you know what? Not going to bother. I won't, because it'll make me look stupid. Although I think I do a pretty good job of that myself, but it's fine. Boycott Chandler? Yeah, I think it is time to. I think actually we should file an official complaint of plant cruelty. So I'm kind of just wasting time until we've got US news. I hope you don't mind. Kind of just yapping away. That's what I do best. I'm sat in my office on my own pretty much all day, every day. So when I get on these streams, it's kind of the only time I've got to talk to people. Said you're Asian as well. Good stuff. Which part of Asia? I don't actually know exactly where I'm from. I think it's I did a DNA test. I'm 40%. It said Vietnam/Chinese. So I'm not really sure what that means. So it's one of the two. What time is it live, please? I did not get notification. I am subscribed. Being subscribed doesn't give you the notification. You need to click that little bell. Click the bell. You'll get notified. The streams start. The times change, but here's some source for you. You can go a1trading.com/livestream-schedule, and you'll see here the top one is when it starts. So 8:15. This is in EST. I think that's right. EST time zone. So yeah, just convert that into your time and you'll be golden. But are you really Asian? Where are you from? Yeah, no, I mean, in terms of DNA, yes, 40% Asian, but no, I was born in the UK, so I guess not true Asian. But I do really like some fried rice, and you know, I went to Korea, had some cold noodles, they were banging. So it's definitely in my blood, you know. Although I went to Australia, I tried chicken's feet. That was disgusting. Nearly threw up. I'm not a picky eater, but that was too much. So yeah, maybe it's just not for me, maybe. Joshua, what are you talking about? Oh, you're talking about the meat. Oh, it's all good, Josh. We're all friends here. It's all good. We you know, I'm not like a lot of the other guests that come on here. It's pretty normal for me to come on, talk about trading for about 5 minutes, and then we just yap away for the next hour. Bring back OEM. What's OEM? Anyway, we should probably get back on track. So Mark, here we got 2 minutes. Let me actually just put these side by side. Let's see what reaction we're going to get. Here, let me see if we can do. I'm not as rich as Nick. I don't have the trading view, the big thing. I've only got 4 charts because I'm a bit of a peasant. So I hope this is all right for you. So let me do what we got. We got NAS, S&P. Let me just add the watermarks on. So we got NAS, S&P, US 30. We don't need all that. Let's do DXY. We can leave the S&P on. We'll do 5 minutes as well. What else should we do? Should we do oil? Let's do USD. Oh, that'd be, I guess, USO, USD. There we go. And probably gold. I think gold's a good option to have. There we go. Okay, we're prepped. We're good to go. Celia, you got the Edge Finder 2 days ago. Brilliant stuff. You'll be on Warren Buffett's level pretty soon. Don't worry. Edge Finder just changes everything. I know it sounded like sarcasm, but it's not. Maxwell, you're new here. Maxwell, welcome to the stream. Oh, we've got it. It's coming out. Hold on. Let's see. We've got pending home sales increased. Actually, really big. 6.1 on home sales. Oh, sorry, pending home sales. We have got personal spending up to 0.7. We've got personal income at 0.5. Still waiting on the PCE. Personal income's up. CPI price index year on years up 2.3, 2.2. Not a huge deal on that one. Slightly above forecast. Dollar is up off the initial reaction. 0% on the PCE. This is month on month, so it's declined to 0 from 0.5. Interesting. I'm just going to wait for this. Now we can have a discussion about what these numbers are. Hold on. Is this one going to come out? Has anyone else got the number for year on year, or is it still pending? Confidence already improved with the Edge Finder. That's amazing to hear. Look at Josh and Ball out. Proper discussion about where people are from. But yeah, I do agree. We are absolutely a product of our environment. Is 0? Why is it still not here? Am I, let me just double check Forex Factory. Maybe I'm really slow here. Is it, Wednesday 30th? Where are we at? Cool PC, come out 0. Interesting. I think I'm being a bit stupid. Sorry, guys. This is really unprofessional, but I'm just a bit lost. Where's it gone? Here. There we go. Okay, so it's 2.6. So it came out of forecast. That's fine. No big deal. So what we have got is, let me just find the top so I can run down. Here it was. So we've got PCE coming out 0. This one's flat. So to be honest, very uneventful. Not really. It doesn't mean anything to me, to be honest. It's pretty stable. Pending home sales is a big surprise, actually. 6.1. Personal consumption, personal income at 0.5. Personal spending at 0.7. Okay. Yeah. Let me just move that over here. Sorry, guys. I'm not very professional at this this streaming news thing. So let's go back to the dollar. Here we go. So off the back of that, we've got the dollar up. Let's see, how far did we go? Up 0.1%. Yeah, nothing too big. So markets seem to have not really cared. And this is a theme I've noticed throughout the markets recently, is even things like, actually, Sean pointed it out, London sessions being very slow. News hasn't been that impactful in terms of price movements. And I would assume that's because tariffs are still the main focus. So regardless of what news comes out of, regardless of what news comes out as, the focus remains on tariffs. So I don't think it's a huge deal. And obviously, year on year came out as expected. So again, no big shock, to be quite honest with you. A1 will take over Bloomberg. Alan, yeah, let's speak it into existence. Let's get all of the Bloomberg TV people to come and watch Forex James scramble around to try and figure out how to use a news calendar. And this is the last time you'll see Forex James on the A1 show. He mysteriously disappeared. Oh, yes, we do have NFP coming out on Friday. So that will be interesting. So we'll see if we actually do get any reaction from that. I'm not sure what the expected is, but we'll figure that out tomorrow. That's true, Alan. It does seem to be getting revised lower. Time has flown. I've got 10 minutes left. So if there is any questions before I go, let me know. I'm happy to go over charts. I know we've kind of just been talking nonsense, really. But yeah, if there is any chart requests or anything, I'll quite happily go over them for you. Gold seems to be doing okay, but yeah, it's just really not much there. I don't think this is even a fib level, is it? No, it's not. I'm fairly sure it's just been ranging this entire week. Let's see, how long has this been? 32 bars. Far out, yeah. Okay. To be honest, I think the ideal place to go long on gold, in my view, would be here. So if we scrap that, if we could get a break lower on gold, come down to, what would this be? Around 3,200. That would be great. Stop loss, pretty much just there. That would be great. But whether we'll get that is a different story. Dominic, you want Euro Swiss? Okay. Euro Swiss here. So let me just take a look. Swiss, so Euro's down, dollar's up, Swiss is up. To be honest, I still like Euro Swiss to the long side, even though we're having a dip here. Do I though, actually? See, I'm a little bit torn because we are in a risk-on environment now, technically, but it could flip. So what we've got now, I would just follow with, because, you know, we could sit here all day and say, oh, well, if this happens, that could happen. If that happens, this could happen. We'll end up just doing nothing. So because we are in a risk-on environment right now, I would be looking to buy. And that's because obviously Euro is already doing quite well. The Swiss franc has been performing incredibly well, to the point some would argue the S&B is about to intervene. I don't think they're about to, but I think it's a possibility. So if we see the S&B intervene and we see the Swiss franc go lower on the back of that, we could expect Euro Swiss to obviously gain value. Now, I'm not going to place a trade on that because that's more of just a bet rather than a trade in my view. But yeah, I think Euro Swiss longs, maybe. It's not something I'm going to do, but that's where my my instinct is going. As for CAD yen, truly have no idea, because oil's down. I don't really have any bias in oil, so it makes it very difficult for me to have much of an idea on CAD yen. I did speak about it on my stream earlier today, that I think we could see CAD yen continue lower. The only slight thing I'm a little bit concerned about is I think the yen might be stretched. I think we are likely to see the yen continue to the downside a little bit before we continue higher. And again, that's mainly driven by the fact we've had quite a strong risk off move, and now we seem to be on risk on. So yeah, likely as we see that transition, we might see some profit taking and closing of positions on the yen into more risk on assets. Bitcoin is my risk on / risk off meter. I'm not sure what Bitcoin's doing actually at the moment. Let's just take a look. Wow, it's had a huge rise. Broken out resistance quite nicely. To be honest, if we could see a dip on Bitcoin to a 50% level, I actually might buy this. Now, I always say that I don't trade crypto. I've got no idea really about anything to do with Bitcoin or any of the others. But I would take a technical trade on Bitcoin, to be honest. So this looks quite strong. Take up to the previous highs, actually. Maybe just the fib extension. Won't be too greedy. Something like this seems pretty strong. Pull back into the golden zone. Let the 200 moving average come and meet price. We take it higher. And we get rich. Happy days. I think that's quite a nice trade idea. I'm going to add it to the watch list. I appreciate that, Alan. Thank you. I'll send you a profit split if I take the trade and it wins. If not, I'll send you an invoice. Currently short Euro Swiss and considering to close or let it run further. Well, if you're in a short, I would hope you took the short for a reason. So you should have like a trade thesis or a trade idea behind it, rather than it being, should I close? Should I not close? Don't know what to do. If your trade idea is still valid, then hold the trade. Trail your stops, let it run. If it's not, and the reason for the trade's no longer in play, feel, makes sense to start taking profits or take partials and trail stops. Yeah, Alan, I completely agree. I think Bitcoin is a quote unquote luxury investment. I think that's a pretty smart way of saying it. But yeah, I don't know. I hear quite often mixed opinions on Bitcoin. It's risk on, it's risk off, it's this, it's that. I don't know. Really, really no idea. Any invoices will automatically be returned. It's fair enough, Alan. I did the same thing when the IRS got in contact. They weren't very happy when I did that, though. Let's see. Pound yen technically looks really good here as well. We've got a really nice rejection of this fib. Problem is, I don't like it. Again, I've got a pretty bad feeling about this, and I can't tell you why, but this looks like the trend's about to shift. I don't really have a bias on the pound. I think the yen is a little bit stretched, as I've previously mentioned. We do also, as I said earlier, we've got the Bank of Japan rate decision tonight that we do need to keep in mind. Although I'm not expecting a change, it seems like it's priced in that they're going to hold. I would be very surprised. I think the markets would also be very surprised if they do hike. Bank of Japan is notoriously slow, and especially with everything going on with tariffs, just don't see it happening that they're going to hike. So I would expect very little reaction. But if we do have a hike for some reason, we are likely going to see pretty large buying of the yen. But yeah, we'll see. Check US 30. Took New Zealand Swiss long, like it. All right. Let me check New Zealand Swiss, then I'll move on to US 30. Wait, what did you say? So you took long, okay. So daily's bearish, weekly's bearish, monthly's bearish. I wouldn't want to be long into that, to be quite honest with you. I've lost my edge finder. Hold on, where's it gone? Let me get it back. Here it is. Let me just cross-reference. Let me make sure I'm not missing something key. Yeah, it's not on top setups either, so it's not even just a technical thing. The data clearly doesn't really support this position either. So I'm sorry, Max. I hate to be the one to say it, but I don't like it. Panda is once in US 30, so let's check that. Once you have a bias in place, how do you execute? You go into MetaTrader and you click buy or sell down. No, I'm joking. I'll use a fib, as you've been seeing throughout this segment. So I'll draw it from in this case, if I was going to buy, I would draw it from the low to the high. I'd wait for a pullback into 0.5 or 0.618. Then I would look to actually buy off this level once we saw a rejection. If I'm selling, then I'd do the opposite, draw it from the high to the low. And again, look for that 0.5 to 0.618 level. Let's check US 30. Yes. Okay. So actually, the daily's just flipped bearish here. We've got the cross. Yeah, weekly and monthly still bullish. Is it on the edge finder though? Is the question. Let me just excuse me. It is with a score of 5. To me, a score of 5 isn't good enough. That's like it's like one of those water fountains, when you get, it's just really low water pressure. When you get in a shower, you want like a powerful shower. It's like a slow, weak stream. That's like a score of 5 equivalent in my view. So it's not enough for me to actually go and buy the Dow. Maybe if we could see that increase to like a 6 or a 7, and we could see the Dow come down into this fib level, that might be the way then to start going along. But if you're wanting to go long, or if you're wanting to get involved in the indices market, I really think Nasdaq's probably the better option. The only problem is we've still got this gap, but I like this level. I think this has potential to hold and continue higher. So if this H4 candle can close bullish, that might be a sign to get long. Now, I probably will execute a long position here if we could see this candle close bullish. Stop loss pretty tight on this one. I wouldn't want a large stop loss, because if we start coming lower, then I'd rather just rebuy it on the fib level rather than having to hold a losing trade. I'd probably just take profit to this high. That would make it a nice 1 to 2. Take profit there. Keep it simple. Bashi, no problem. I'll see you soon. Have a good one. I think I'll be heading off quite soon as well. Let me just check who's on after me. It's probably Chris. I bet it's Chris. It's Chris. Yeah, Chris is on after me. James, any idea? Gold is up and Nasdaq also bounced. Why are they same direction? Why can they not be in the same direction? So is my question. And what I'm going to do, just to show you something, is we're going to do a comparison. So we're going to go add to compare. So there you go. So why, hold on, what was your question to? Gold is up and Nasdaq also bounced. Why are they in the same direction? I would say they're actually not in the same direction right here. So you can see very clearly when investors didn't really feel very comfortable, which was pretty much just here. But you can see, I mean, they're pretty, I mean, I'm not going to say 1 to 1, but they're pretty close. So saying that they're in the same direction doesn't really mean that much. I'm not saying that to be mean or condescending. I was just trying to visualize visualize it for you. Oh, you know, I'm not done. I've not checked where the retail guys are. Retail sentiment. Get rid of metals, get rid of indices, we'll get rid of commodities, we'll keep it major minors. So heavily long Euro Aussie, Pound New Zealand, Aussie New Zealand, Euro New Zealand. This is great for me because I'm long Euro New Zealand already. CAD yen, Swiss yen, Euro US dollar. Okay. Nothing overwhelmingly surprising here, to be honest with you. It's not a surprise they're long on dollar Swiss. It's not a surprise that they're short on Euro dollar. They're just counter trading the trend, which is very typical of them to do. Do we have more news today? Not really. We've got crude oil inventories coming up in about 10 minutes, but yeah, nothing else for today. So we can breathe. I feel like I've gone 100 miles an hour on this stream. I don't know why. I think it's the heat. It's made me a bit more happy. It's given me some energy. I may have also had a beer before I came on, but that's not relevant. Sweet. Okay. God, it's so hot. I think it's good. I'm in my office is like at the top of the house, so it obviously, you know, if you went to science class, heat rises, so it's really warm. I feel like I'm in a sauna. I might cut this Euro US dollar position, to be honest with you, and let the other 2 Euro positions just run. One's already break even. I don't really want 2 or +2 exposure on the Euro right now, especially considering that I think it's a little bit overvalued for what it is. So yeah, I'm going to slash Euro dollar, take a small loss on that one, let Euro New Zealand run risk free, and then we'll leave Euro pound to just do what it needs to do. I think that's the move. Okay, Chris is here. I got the message from the tree guy Chandler. So guys, have a good one. Thank you for watching as always. Stay safe. Don't get margin called. I'll see you all very, very soon, and enjoy the rest of your days.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, good morning. Happy Wednesday. Interesting morning. We just started off like really rough, big gap lower. I think that was a reaction to the negative GDP number that came in this morning. And then we had core PCE and PCE at 10 a.m., which may show some signs of improvement. So we're kind of at a stalemate, trading between a couple of gaps. So I am monitoring some levels closely. Let me see here. Let's go session. All right, so let's see what this looks like. It's a little noisy. All right, I'm looking to see if we will get a bounce off of this session VWAP this morning. So if we pull back to VWAP and then go lower, I'm just going to keep an eye on price action for the morning. So here we have the day. I had a quick win this morning on SPX. As soon as the market opened, I sold a broken wing butterfly for 80 cents, took that down to 40 cents. It was a quick 50% winner. Price has actually pulled back right to center, which is not a bad thing. So typical sell side does work out pretty nicely. And we're lower. News-wise, like I said, here's what happened today. So ADP numbers came in really, really weak. Forecasted 114 came in 62, revision from 155 down to 147. I don't look a lot into ADP non-farm. It's mostly important on Friday when we have the actual non-farm numbers. But the GDP numbers came in negative. So 2.3 revised up to 2.4. Forecasted GDP for the quarter was 0.2%, came in negative 0.3. I'm not sure if that's what was the immediate spark for the market. But if you look at the futures feed here, that 15-minute candle is the 8:30 candle. So clearly there's a reaction right there from the future side where this market dropped on the open to close. The candle was down about 0.65%. Right. So fast forward, 2 hour or hour and a half later, you have your core PCE that came in, and this should be refreshed. I don't know why this not. There we go. So core PCE month over month came in zeros. I've got a better look at it from Bloomberg. Here's what we have for the 8:30 news. Right here. This is the chunk I'm looking at. Or I'm sorry, the 10 o'clock news. So at 10 o'clock, core PCE month over month revised higher and then came in zero with a forecast of 0.1. So you can see that as a potential positive sign as far as inflation numbers go. Core PCE year over year was a revision higher, but a forecasted 2.6 that came in 2.6. Now the revision's not great. I think it went from a 2.8 to a 3%. Yep, 2.8 to 3%, so revised higher, but that's a 0.4% improvement for this forecast, and it did come in 2.6. I still think the market would see that as a potential positive sign that we're trending the right direction. Go to PCE. We had a previous print of 2.5 revised up to 2.7. Forecasted 2.2 came in 2.3. I'm just going to say this is a mix. It's obviously an improvement from the previous, but revised higher and just missed forecast by 0.1%. And then price index here, the month over month, forecast is zero, came in zero, and then the revision was higher. I'm going to say that's a negative. So I'll say this is a neutral. I mean, take this back here. So we'll go neutral and then a negative. So, I mean, the market is responding a little bit. Like we kind of stopped the bleeding immediately. Market's kind of back up where we started. So we're around opening price. So open up, there's a 5-minute candle, and we're right back to it. So that would have been pretty simple for my typical, sell side SPX. But what I said I'd be watching here is perhaps we are coming right back into this session VWAP, and do we hit this and reject off of it? So if I see a red candle, from here, I might take a stab at that and see if we go back and revisit the session lows. We do have this is a 2 and 3 multiplier for the VWAP. So perhaps we do get to one of those, but I'm not sure. It could be just a noisy day. I have a pending order to do a broken wing butterfly up here. So I haven't been filled yet because I'm trying to get filled at a price I'm happy with, and that would be a sell call around 55.75. So it's a 55.70 -2, and then a 55.70 would be my +1, and then another broken wing, which I just skip a couple of strikes, and I go 55.90. So I'm trying to get filled on this trade for $1. And in order for me to get filled, price is going to have to come back into this gap and fill me. But for me to take this trade, it's like $1 fill is not bad. If price, taps this gap and then falls, then this dollar becomes 80, 70, 60, 50 cents for a partial winner. If I let it go all day, I can let it expire for the full dollar. But anyway, I think it's just, I don't want to be overreactive. I had a ton of trades yesterday for profit. I closed out, I think my trade counter yesterday was up to about 130 trades. I did a lot of pruning. So trades that I've taken off for profit so far this week, took a winner on IBIT. And this is like for the entire portfolio. So IBIT was a winner. Google had multiple winners. I had Google with, it was a ratio spread. SPY, I had multiple winners. AXP had multiple winners. Tesla had a winner. Apple had multiple winners, and I rolled a call. Snap, I took off a synthetic trade, so I took a winner on Snap. SMH took a winner there. NVIDIA had a bunch of winners. I had ratio spread, naked puts, and bull put spreads all took profit. So NVIDIA was up like almost, I don't even know, like I think 10 accounts, almost like $6,000 yesterday on NVIDIA. Palantir took profit on Palantir yesterday as well. So all in all, good profits, protecting, raising capital. I've got now over 50% of my account, 50% of my portfolio is cash. So I'm just kind of ready for the next kind of good looking opportunity. And I'm not exactly sure what that's going to be or where that's going to be, but that is the plan. So a lot of updated trades yesterday. So far today, prices, reacting aggressively on the 8:30 news, kind of stabilizing off the 10 o'clock news, and we'll see if there's any additional flows directionally for the day. Yes, no, maybe so. Okay, so we'll see. Let's go into some top down. I'm going to watch this. I want to keep an eye on this futures feed. I'm going to pull this over to my other screen so I can spot check that as we're talking through today's session. I might take a futures trade if I see rejection off that VWAP. God, it's just so much noise on my chart. It really is frustrating. It's like I don't like having crazy noisy charts, but I know some of you look at my charts and you're like, you got a ton of stuff on there already, which I do. Okay. Let's see if price behaves off that VWAP. All right. Couple things. So with the market being down, my first reaction was look at TLT. TLT is lower today, and we're starting to see US 10-year indecisive. I'm kind of counting the days, like day to day. Are we going to see the US 10-year get back down to Liberation Day announcement? Yes, no, maybe so. I hope this is the case for the sake of my 27 day to closing now for my home. but I've got to lock in around 6.6 right now, just in case this thing spikes up and doesn't cooperate. But I can also do another lock within 20 days or 15 days. So if it improves, then I will try to grab another, 0.1% improvement, maybe more. We'll see. But let's go top down. So we're still kind of hanging in there. This is a bit of a no man's land. Look at some gaps. It's pretty easy to see we've got a lot of potential direction. Gap fill right here. Let me change this color. So are we going to see the bulls fill this gap up here? Are we going to see the bears fill this gap or this gap? I don't know. I mean, price is going to flow some way, shape, or form. I think as long as we kind of shrug off today's gap, then that's probably a good thing. I think that's a great sign if we shrug off today's gap. That means that even with negative GDP, the market, kind of instantly reacted to it. But if we have price action suggests that, well, maybe it's not as bad because it was a front run move with companies with the tariff talk. Yes, no, maybe. I don't know. It's just there's so many levels where we have to watch for it. This is back to the question of where's resistance at. I still think if this market's going to find a way to go higher, going higher is still going to run into a lot of resistance, right? Swing to symmetry, a lot of resistance. I don't think this is a full-on, bull market. I think that would be to me, I'd be the most surprised if this market revisits all-time highs and this is a cup and handle measurement. I'd be the most surprised. I wouldn't be surprised if we keep like grinding up here, melting higher, and it becomes kind of a choppy, indecisive zone. Kind of back in here, this is an overreaction. Market comes back and stabilizes. And then honestly, the analysis is like, well, this looks like a bullish pattern. So there's a breakout. This could also be a false rally, and this is a rally within a bear market context that sells off. And that's a tough spot to be because how do you position for that? Enjoy the melt up if you get it, and also be willing to hedge to the downside if you get it. That's the reality, So I would be probably just sitting and waiting for better confirmations. I mean, I think this whole year is going to be volatility, trade small, don't take on a bunch of crazy risk, and wait for good opportunities. And if you don't see something solid, I'm not going to take a trade. Like I'm going to be pretty patient. I have to be patient. And it, like I said, the surprise is if we go higher, great. I do wonder what happens like today if we get the sentiment print. So if you go to your Edge Finder, go to your sentiment print. We've had 9 weeks in a row that have printed over 50% bearish, and that's the worst reading we've ever seen as far as like consistently bearish. So I do think that's why this market has continued to climb the wall of worry. Here's your investor sentiment report. We should have 9 prints in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9 in a row over 50. It's going to print again. I think after today, it'll be another print. So we should be able to see this on the Edge Finder tomorrow. Do we get 10 prints in a row greater than 50? Right? Do we get 10 prints greater than 50? Or is the sentiment shifting a little bit? Because since the bottom on April 7th, the market's up like 15%. Like, is that enough to get this back to a bit more of a neutral setting? Maybe. Like less. I mean, the historical average on the bear side is like 31 or 32%. Historical average, 31% bearish versus 37.5 bullish. That's historical average. We're way off of that, right? So curious how that all plays out. But that'll print, I think, today, and we'll see this hopefully updated tomorrow on the Edge Finder. All right, so kind of no man's land for today. I've got a blue, or I've got a green line up here for that gap fill to the upside. So if I zoom out, there's that bullish gap fill. Then I have a red line for this bearish gap fill. Price right now, we do have Mag 7 today after market. We do have Mag 7 tomorrow after market. We do have non-farm on Friday. This is the end of the month. I mean, we could just kind of wrap up this month with, well, a little bit of excitement. Price is going to be relatively calm. We still have Mag 7 earnings for the day. Like perhaps the market's still going to wait to see where Mag 7 can take it. But tape-wise, we're down. I mean, that gap is pretty much why we're down for the entire day. Right? So like I said, I'd be surprised if we get to the highs. before we retest some, either a higher low, or we could retest the lows entirely. I don't want to be too bullish. I don't want to be too bearish. I think it's just a time to trade and survive and grind, and don't force a bunch of trades. I was fortunate in this area that, having the cash and the courage to buy things and sell premium, it paid out very, very well, which has allowed me to maintain, positive year to dates. I've got some of my accounts now, they're up into double digits. I have one account that's pushing almost 15% for the year. Considering from the recent highs, we're still down about 9 to 10%. I'm very happy with that. And I'm just going to continue to grind. NASDAQ, here's the Qs or the NDX. Same thing on some measurements. We could still see MAG 7 push higher because we just have steady earnings. Do we push up and fill this gap? Do we push up and hit this resistance around the 200 moving average? Sure, all the above. We are also on the right-hand side of the trend line. So right now the bears are today's gap kind of makes it a little bit more confusing, but the bears are not just running to the downside right now, and that should be seen as kind of a good thing. But I would be very cautious that any additional highs here could be met with a pretty swift rejection. All right. And realistically, let's just think about, sometimes when you trade the markets, think about what's the hardest trade right now. What's the most confusing spot that the market would be at right now? To me, the most confusing spot is going to be right here. If we pull back to this level, why would that be confusing? Because for a second, you're going to see this price up above the 200 moving average, which is going to be interpreted as oh, we're back above the 200 moving average. Well, that's a good sign, right? Sure. We're potentially forming a bull pattern here, right? But if we pull back, okay, well, there's a correction. The question with that is, are we going to see this as a right shoulder that is going to offer up the slingshot higher? Or is this, and this is where the head and shoulders is important to know the technicals, if it gets to this high, the textbook way to trade a head and shoulders is unfortunately not the right shoulder. It's actually the break of the neckline. And if this neckline doesn't break, you're not going to see the momentum. So if we start to turn here, right around this 200 moving average, right above that 200 moving average, if we turn here, this would have, I think, in the near term, a really good reward to risk opportunity that could also be worse, right? So, as far as reward to risk, this could be a really good trade. You could at least take this down if we get a rejection here. You could take this down to, maybe this 19.2 level. So you get a little rejection here with some favorable reward to risk. That looks pretty good. And if it gets worse and we come back and fill this gap, or come back and revisit these lows, then some type of trailing stop loss could work out really nicely as well, because the textbook pattern, if it is a bullish head and shoulders, it'd have to break the neckline. So that could be a failed play. Make sense? So I think the trickiest spot for the market right now is we don't have anything that's really going to disrupt this melt up. And this melt up comes up into the 200 moving average. And then we start to wait. I would say be very patient for confirmation. But between this 200 moving average and this recent high right here from that pullback in March, that area would be, I'm looking for confirmation. I think I'm going to take a stab at maybe a hedge trade. I might look at some bear put spreads. I'll do something where the asymmetry is favorable. If I'm wrong, I'll make those trades are small. I'd like to take a trade that if it offers up a let's say a 3-to-1 or better, I'll take the trade. If I lose on that trade, it's okay, because the rest of the portfolio carries the slack. Make sense? But that's a tricky spot for the markets to be at. Okay. Dow. UNH is probably what really hurt the Dow the most. This has room to still potentially get to the April 9th highs right here, and still has room to potentially pull back into this gap and this 200 moving average. So again, kind of similar outlook. Do we have heavy resistance here, heavy resistance here? We are seeing higher lows right now. If this market just kind of grinds, if resistance holds, you can see like a rollover here. We could revisit those lows. So I think this could be a challenging time where it's like there's not a lot of direction. So just want to be mindful of that. Russell IWM trading at 192. I think I've got my covered calls that are probably looking pretty good right now. IWM. They're still down. What the heck, dude? This is out to June. I guess there's still some time in these trades. I've got these covered calls at 200, which is fine. If they get called away, I mean, I pulled in $3 on each one, so it's $1,200. I did do a couple rolls yesterday. I rolled out Coca-Cola. So 100 shares of Coca-Cola. I rolled out to the end of the year into actually January 2026. This is a defensive play. I rolled it out for some income. I pulled in the roll paid me. I'm trying to think what I pulled in like $1.50, which for Coca-Cola that's a pretty good covered call. Granted, I went out, a lot of time. I'm out another 260 days in this trade, but to increase my bottom line, 1, 2, 3, 4, 5, 6. So 600 shares at $1.50. I mean, that's another $900 improvement in Coca-Cola for a trade that I don't think is going to have much volatility to it outside of if it stays at 72, great. If we have a dip, that's fine. But I'm willing to have that and own that in the portfolio. MO, December, and pulled in some more income. This should be another $3,000 in MO. So a couple of rolls. NVIDIA, I cleaned up a lot of trades in NVIDIA. I have some shares. I need to add in a new collar trade right now. So I want to take a look at that. My break even on NVIDIA. Let's go to this. So NVIDIA, I'm looking for my collar position. Took profit there. Let me find this one. Fudge. All right, it's got to keep searching. So looking for my break even. So willing to own. Those are all, there we go. Okay. So my break even on NVIDIA is around 120. And I'm going to set in another collar trade on this one. I've got naked puts on this as well. I'm going to let this percentage increase. I'm only up about 17.5% on a put that by December, if NVIDIA is above $70, I'm making $350, about $1,400. But on these shares that I have, 1, 2, 3, 4, 500 shares, break even's around 120. Let me see what a play looks like here. So if I go NVIDIA, I have the put. I'll keep that put. I'm going to put a collar trade on. Let's go. We've got earnings on NVIDIA. Maybe just through earnings. Instead of a pre-earnings play, maybe right through it, so 30 days out. Break even, I can still get on the call side. Still get a couple of dollars at like a 120 call. Maybe try to go a little bit higher than that, like a 125. I mean, 120 is I'll lower the price aggressively. Let me see if I can finance this. So NVIDIA has gone as low as 87. And I'd say there's a lot of resistance around this, like 122 to 120. Yeah, I mean, 122 to 125 is pretty heavy resistance. There's a lot of chop back in here, maybe a point around 125 to 130 if we're lucky on the upside. We'll see. But, if this revisits lows, I could put in, a floor on NVIDIA, and we're just going to wait for this kind of bottom out and see if this can squeeze back up. So I think a 120 would be aggressive. 125 would be allow me to grab a little bit more profit, but less on the collar trade. But I think the downside protection would be probably the most important in case this thing does not do well. Let me see. So if I put in a 125 call, and against that, that's 139. I'd have to do like an 85 here. So I could put on a collar trade for 48 cents. This is right around earnings. This actually, I might want to go out farther than that. Just in case. I think I've got to go farther. Because if I play this just on earnings, I'm not going to have enough time to really see that put pay me if I need it. So I'm going to go out. Let me double that up. So from 51, I'll go out 80 days to July. All right, NVIDIA, July. This is a little bit better. I can do like the 125, 130. 125 is not bad. That gives me basically an improvement of $8.55 because I'd go up $5 for my break even plus pull in $3.55 credit. That's not a bad spot to get it called away. 130 would be a $10 improvement from break even plus 260. That's a good win. I just don't know if we're going to get back above 130. So let me do a 125 and then see if I can finance this. So the 80, I can pull in $2 improvement, which lowers my cost basis to like 118. And if it gets called away, it gets called away at 125 minus. So 118 break even minus 125, get it called away for 500 shares and make $3,500 on NVIDIA for a little flipperoo. If I want to go up a little bit higher, I can still get $1 credit. Get this one called away for almost $1,100 times 5 minutes. That's a much bigger profit chunk. So I'll do this. I'll finance this with about $1. If I can get $1 here, maybe it's just right at the ask price or the bid price. Let me see what I can get. So this account has 100 shares. Let me put on a collar trade. Let's try to get $1. So $1's not filling. Let's try 97. 97 cents got filled on the collar. All right, I'm going to add this in. So adding a collar trade. The most important thing on that collar trade is tracking the debit. That's an $80 debit for $1.66. So it's a July 18 expiration. I'm selling the 130 call. And I'm buying the 80 put. That 80 put debit is about $1.66 debit. Because that's what I want to track as far as lowering my cost basis. If that $1.66 becomes $3.20, $4.80 over $5 if NVIDIA really drops, especially through earnings or before earnings or even at earnings, I want to close it out to lower my cost basis. So break even price. Minus 97 cents. So at 119.61 is my break even. Okay. So that is the July 17th or July 18th, 130 by 80. All right. I'm going to get these in real quick. So this account, go to July, sell the 130, buy the 80, get filled hopefully for try 97. I don't think I'm going to get filled there, but we're going to find out. 97 not filling. Let's go 96. Got filled at 96. Okay, fine. This account, same thing. Sell the 130. Buy the 80. Try to get filled at 97, 98 cents maybe. 98 not filling. 97, that's the mid. Come on. 96. Filled. This account, no shares. That's fine. This account, this has it. So that's 9072. Sell that. Buy that. 96. 9072. Come on, you turds. Is the video up or down a little bit? I'm trying to think why these fills are 5 cent different. So I'm playing around with like little penny discrepancies, but come on, man. That's like 6 cents different. Filled at 90 cents. Ugh, that was not fun. Try this one, sell the 130. So my debit side is going up a little bit, which is why this is chewing into this trade. So I'm going to go try to get 93, 1608, 94 cents got filled on that one. No shares of NVIDIA. No shares of NVIDIA. I think that might be it. No shares of NVIDIA. No shares. No shares. And no shares. Okay, so that should cover everything for me. So now my NVIDIA, 1, 2, 3, 4, 500 shares. I have 1, 2, 3, 4, 5 protected puts, 1, 2, 3, 4, 5 calls. There's my collar trade. So organize that in the platform. All filled between 90 cents is my worst fill, but 94, 96, 97. So I'll take off 90 cents. So collar trade. I'll put 90 cents credit so I can track the lower of the two. And that will be a break even of 120.58 minus 90. So 119.68. All right, break even there. Okay, that's NVIDIA. Let's keep going. Oracle, I actually might take, and this is going to be kind of annoying, I might take an assignment on Oracle. A 155 by 150 ratio spread. The break even is going to be, trying to think here. I think this account might have it. So it took in $1.31. This is out to May 16th, so still a few more weeks away. But a 150 assignment minus 5 minus $1.31. I'd own shares of Oracle at 143.69. 143.69 is, I'm just going to try to be aggressive on selling calls. This is going to be a repair trade, not necessarily looking to be crazy, profitable. It's like just repair it. So I've got the capital for it. We've got lows here around 120. Try to chip away, lower the cost basis aggressively. If I can lower the cost basis enough, so if I got a break even around low 140s, and I can lower the cost basis down here, down here, down here, then I might not be as aggressive on covered calls. If prices bottoming, I think we could go back up and I could, achieve some profit there. But I'm just going to try to repair it. Okay, so I'll keep an eye on that one for an assignment. That's still a couple weeks out. Let's keep going through. We did our indexes. Bond volatility is up a little bit today. VIX is up a little bit today. It's starting to fade slightly. Dollar index, let's have a look here. Dollar index on the daily chart, still pretty sideways. It's like the dollar hasn't decided whether or not it's ready to pull back yet, or it's still going to get hit lower. It's okay, like staying out of dollar cost. It's currency strength on the day. And by the way, I think I've got a hard stop today at 11:30. Let's do this. Okay, currency strength in the day, still pretty quiet, 50 and 50. We got the pound weaker today. Lots of noise around that 8:30 news in the US. So we saw a jump up in the Swiss, it's fading. We saw the Japanese yen go from weakest to midpoint. Now it's back down again. Aussie, New Zealand, this is kind of encouraging. We're seeing some risk on. Like, look at the New Zealand and the Aussie starting to gain some strength. Like, that's a lot of crisscrossing going on around that 8:30, 9 o'clock window. So tons of noise in the last probably almost 3 hours of trading now. Since from 8 news, about 2.5 hours of trading. That's a lot of back and forth. Aussie, New Zealand getting a little bit stronger. Watching the Swiss dip is kind of encouraging. Aussie was strong, came down to the zero line again, and then that's just noise. Very noisy day in currency land. Dollar index. Look, if I can't get a trade to the upside, either back to 101 or a drift back into this larger inefficiency and a rejection around 102, I may not get the timing or confirmation that I want to take that trade. So if this is what happens, if the dollar continues to work back a little bit, I'm just going to wait for a trend line break and then look to resume selling on the dollar. I don't want to call the bottom here. There's still symmetry. There could still be pressure on the downside. but that would be a better trade in my opinion if we get more like oversold conditions. More oversold conditions on the dollar probably looks a little bit better. So I'm just going to stand aside. Like, doesn't look good to me on the dollar index. Oil, this is starting to shape up where I may still take a stab at this from the bullish side, right? But I've got to see this thing back down towards these April 7, April 8th lows. This might be April 9, actually. That was like the low in the market. So if we come back down to that level, perhaps I see that as an opportunity to, get long oil, at least for a very low risk, high reward trade. But I'll wait. I'll see if that chart alarm gets hit. Natural gas popping back up above the 200 moving average. I'm still long in this one through 2027. I think commodity wise, I think I'm going to be okay on that, hopefully. Gold, everyone's favorite. It's still sideways for the last 1, 2, 3, 4, 5, 6 days. It's interesting how this level is not breaking though. This 3260 level is not breaking, not yet, but clearly there's a little bit of intermediate support. I don't know what moving average that would be. I mean, that might be like a 9-period moving average. I got a 21 right here that is hopefully going to get hit, but to just see it go sideways for 6 days, I do wonder if there's some follow through. High, low, indecision. If we have some follow through, then we just measure out some symmetry. I'm sure there's traders out there that are wondering if this breaks. I'll zoom into a smaller time frame here. That if this breaks, I'm sure there's going to be some short-term traders that are looking to get long and resume this uptrend. So you want to zoom in on gold? That's fine. You can box it in, right? I mean, price is at the lows, at the highs. Keep an eye on it. Watch out for the traps, but if we break and go higher, well, that run back to the highs could make some sense. I wouldn't be super bullish on gold. I think that if we actually make a breakout, this is a good looking trade if you're fairly tight and precise with your stop management. I'd still like to see a dip further down just because I'm waiting for that 200 bar count, which we've got to be near 400 bars at this point. Let me check the last time this thing touched. So back here, I don't know if that actually hit. Nope. So it's way back here in October. So we're back here. So about 396 bars. Okay. I mean, that's a noticeable bar count. A lot of indecision, probably some consolidation, a bit overstretched. I'm still comfortable having gold in the portfolio. I haven't sold calls. I haven't taken profit. I'm still hanging in there. I think there's a good hedge on gold. If the indexes drop, gold looks good. If the trade war stuff continues to escalate, if there's no clarity, no win-win, gold continue to look pretty good with central banks around the world and kind of playing this like non-dollar positioning. Silver, I still like silver. I want to see if it can break these highs at $35. Bitcoin, pausing. Any pullback towards the 85 to 84 handle looks pretty good to add. If we get a swing trade here, I like this. Swing trade, look to see if we head back up. And it might be, pullback, and it might be some wave structure, but I think we can hopefully see sweep of these highs, nice swing to the upside, higher low to higher high would be a good play on Bitcoin. What's nice about this too is if this is a low to high, these fibs actually play out really cleanly. This is a 109 618 extension. So if we pull back to a 382 or 50 618 pullback, then I'd be looking for this target. So this would be looking to enter. This would be looking to exit up here. That's just a swing trade. Now, obviously, if price goes higher, hang into it, hang on to it. I think Bitcoin, from the bigger picture, the bigger swings can get up into the 120s, 130s this year. So levels in the 120s, 125s, full measure moves between 130 and 145. I mean, it's fairly flexible, but obviously making all-time highs again would be encouraging. MicroStrategy still hanging out 378. If we start to get higher, my trades should be looking better. So this bull call spread is up about $225. Potentially pays out closer to $1,100. $1,150 is my $1,170 is my max profit on this trade. Realistically, if I get this thing up to I don't know. I mean, if I'm up 100%, I'm okay with that. If I'm up 150 to 200%, I'm probably going to take the profit early versus waiting to January. It's just a trade. It's a pretty cost-effective debit spread. So if Bitcoin is up, MicroStrategy cooperates. This trade looks a little bit better. Anything at $500 to $600 profit, I would think I'd just take it and move on. Coin hanging out about $200 right now. A lot of ratio spreads have closed out for profit. Copper. Holy crap. That is a big, nasty move on copper today. Wow. Weak demand for copper supply stress. Copper plunges on recent peaks. Copper's down 2%. And thankfully, this dump on copper didn't cost me anything. And I don't want to step in front of this. Like, this is a lot of volatility on copper. This could be if we're lucky, this could be a wedge where it's kind of contained. We'll have higher lows and lower highs if we're lucky. But if we have a weaker demand, copper could be, the sign of, they call it Dr. Copper, like PhD in economics, self-proclaimed. But look, we're sitting here at all-time highs. I mean, if copper holds support, cool. If copper does not hold support, we could have all-time highs become a very ugly correction. So I don't know. We're right in the middle. I mean, that's a monster swing. That's like a 25% swing in copper in the last 30 days. So not fun for anybody. That's a 25% move. Yikes. So be careful. I wouldn't mind taking a stab at copper if we are coming back into these lows again, but that would be defined risk. Probably just a bull call spread and try to get a reward that's greater than risk and maybe take a stab at it. But if we break and go lower, okay, I'll take a small loss. I might hedge it. We'll see. Japanese yen turned off the highs. Just watch your currency pairs. Still haven't broken out fresh highs in the Japanese yen. Nikkei melting up higher. EWJ had a high yesterday that gave some back. I'm going to see if we can get higher than this. I'm going to move this one down. Fresh highs. DAX, little pause. I mean, I still like buying dips on this. I just can't believe we didn't get a dip. Like, it was just gaps, gaps, gaps. This is a V bottom looking trade. So, V bottom, the hardest thing about a V bottom is if you didn't catch it, which would have been right around that 200 moving average. If you didn't catch that V bottom, now you've been waiting for days to get a pullback, and we haven't had it. I mean, you could zoom in and you could, I guess, justify like this is your pullback, right? So we swing up, we pull back, maybe you buy that, right? We swing up, we pull back, maybe you buy that. Like, that's about as good as you're going to get right now on the smaller time frame. But I think on the daily chart, I'm just looking to see, where do we get a pullback? I don't see it yet. Possibly, this high, this low. If this melts up all the way to the highs again, I could see this range trade. I don't know. Depends on how crazy things get. But I'll be patient. I'm still long FEZ. That's working out fine. Nothing on the FTSE for me. Argentina still waiting. I'll see if this one chops around a little bit. Copper, we talked about. Here's Brazil. Brazil, come on now. Don't give it all back. We're just above the 200 moving average. ILF just above the moving average. I want to see if these can stay above the daily 200 period. MAGS gapped lower, but does have earnings today. Today, I believe, is Meta, Microsoft, and then Apple and Amazon are on Thursday. So if MAG7 can print 4 strong companies, 4 of the biggest companies in the world with positive earnings, that might be enough to drive this a little bit higher. Okay. If we can go back, here's a 50% pullback on MAGs. Here's a 61% pullback on MAGs. That might be enough to help, still drive this little melt up. So 50% pullback, 61% pullback. There's the 200 moving average. So I don't think MAGs are dead. Earnings should be relatively solid. This earnings report, this whole like week of earnings, nothing's really reflecting tariffs right now, not yet. So I think that's why the consensus has been okay. It's the guidance that is potentially putting, and nobody's really talking about it. Everyone's acknowledging that things are uncertain, but nobody's really spending a ton of time on it for earnings calls because it's so questionable, right? Apple at 209. Apple has earnings tomorrow. So Apple, Amazon tomorrow. We'll see what happens. Let me bring up, I've got another account here. Take a quick peek. Make sure I've got my puts in for Amazon. I think I put July puts on this one. So let me take a second. I'm just going to check my, I've got a Thinkorswim web platform to look at. There we go. And it is being slow. All right, while that's waiting, Broadcom back above the 200. Google popped on earnings, has faded a little bit. I still like Google holding above 150. We did have earnings; they were solid. They committed their 75 billion to capex. The lows might not be like the guarantee. This could also be setting up, and hopefully not, but could this be setting up a larger bearish pattern? Yeah, maybe. Right? Maybe we don't get back to highs. Maybe this is going to be a corrective move first before we see longer term positioning. So don't think these lows are guaranteed, especially Mag 7. Like this rotation could be ugly and nasty, also necessary. Okay, I've got a June 20th put. All right, so I've got some protection on Amazon in case I need it. So if Amazon does disappoint, I've got 10 contracts running on a put that hopefully offer up some profit. It was a 28-cent debit. That so worst case is I'm up like $15,000 on Amazon. I'm sacrificing $280 max against that in order to hopefully protect my position. Meta, I'd like to see Meta still go lower, even though they have earnings this week. I mean, I don't know what earnings is going to be. This is today after market, so I'm going to start looking to see if it prices out the right way to see some volatility. A lot of earnings trades I will be taking for this week are both directions, just because what is happening is look at Snap for an example. Okay, Snap was actually up like 20+% off these lows. They actually had solid earnings on both sides, and it's down 15%. So I mean, these moves, like this is more than we typically see on a lot of earnings. So I think the price action is highly sensitive, which means I don't care if price goes up or down. I'm just trying to take something that's going to move. And if it moves beyond what's expected, great. That's easy money. So that's what I'm pricing out with a lot of these earnings plays. Microsoft is holding the lows pretty nicely. If we come back and revisit those lows, I'm going to put in some more income trades. So if we revisit the 360, 350 zone, I'm possibly going to allocate a little bit more and also put in some, I like the 1-1-1 strategy for this one, or a 1-1-1-1 so I can define it, but I want to keep it out of the way. Netflix, likely going to stall at some point, but I'm not going to call the high. I've been pretty lucky on Netflix. I was, long, put in some 1-1-1s when this thing dipped, got paid there, did a broke wing butterfly. I was debating, like, should I take on another call trade? It just didn't offer good credit. I was getting like, $1.50 credit for a risk of like $1,100. I'm like, that's a terrible trade. And I'm calling the top, so I'm not going to. So I didn't take this recent top trade, but I will wait. NVIDIA, put on the collar trade. This is a 130 by 80 collar for July 18. July 18 expiration, 130 by 80 collar. So this is 130. If price goes lower, then I'll look to see if that $80 collar or the $80 long put is going to help lower my cost basis. Tesla is still hanging out at 278. I can get it called away this week for 257.50, depending on Mag 7. If Mag 7 is up, I know we have to get through Mag 7 today and tomorrow, and we have non-farm on Friday. I might just be safe and let it get called away and flip it. I'll be up like $6,500 on Tesla. It might be worth it just to not have the risk in case things come, crashing back down, because I also might take another chunk of shares in the May expiration, which is a 245. This one right here, out a couple of weeks now. This is going to be the 2nd on Friday, then the 9th and the 16th. If this 245 is assigned, I want to make sure that I have I don't want to have 200 shares of Tesla on 5 accounts. I don't want 1,000 shares of Tesla. I'm good with like 100 shares, flip it, flip it, flip it. If this is going to be a range trade on Tesla and I can income trade this thing, cool. I can get longer directionally with better confirmation. I can certainly take more income trades if things are dropping, waiting for trendline confirmation, but I'm just going to be taking shares, flipping it, repairing it, and hopefully coming out of this like with some profit to show for it, considering the stock's down, 55%, and I flipped this thing for, $20,000+. That's pretty good, right? So I'll take it. Berkshire, I want to sell it. I looked at some a call condor. I just didn't get the credit that I wanted, so I'm going to pass. Bonds were actually up on the short term. God damn it! I should have been freaking long on short term bonds, because that's what's happening. Like, we're seeing short term yields go down. We're seeing longer term yields go up. That's the steepening right now. But the short term bond market is actually improving. So IEF is flat, but SHY, that's the 1 to 3 year Treasury bond, that's going up. If you look at like the US 3-month yield, this thing's down. You look at the US 1 year yield, we're down, right? So short term bonds are going down. Therefore, or so say short term Treasury yields going down, but bonds going up. So that's not a bad play. 3-month, 2 year also down. 2 years dropping a lot. So the 2 is going down. The 10 is sticky. If you go to the 2 and the 10, here's your comparison. We're still well above the 0 line. The 10 and the 3-month, we're at the 0 line. We haven't had this discussion in a while, but I think we hammered on this last year because we did come out of this inverted yield curve. We are out of the inverted yield curve on the 10 and the 2 year by a lot. And this is what has historically been a borrowed time indicator. It's not the inversion that causes the recession. It's not even the disinversion causes the recession. It's that change in rate. Okay. It's like typically, historically, I think 11 or 12 times in a row, every time this happened, it's like there's a recession. Within about 12 to 24 months, there's a recession. The argument now is like, yes, there could be a technical recession, but it won't be felt all at the same time. 2008 might not ever happen again. It's like we could see sectors and having some type of rolling recession. But I'm sure there's going to be some sectors that perform pretty well. I added trades in healthcare yesterday, so XLV added some trades in yesterday. I like that healthcare sector. I like energy as well. And it's not really oil. It's not really the reason I'm trading the energy sector. It's because it's negatively correlated to the S&P, and it is. If we're going to build for the future, it's like let's have energy efficiency. Let's be more energy independent, and hopefully it's more along the lines of like solar, nuclear, wind. I mean, it could still be oil and natural gas, maybe. But anything to build out this whole AI infrastructure that's this big pipe dream right now. I mean, how sad would it be to have like the future that everyone's excited about without the ability to create it? Like, we don't have the energy to harness the computing power to run the data centers to have AI be anything that's going to help. And obviously, that's why some of the skeptics are like, "No, we'll never build it. It takes computing power is beyond our capabilities." Well, I mean, hopefully we get there, I guess. But anyway, whatever. So the inverted yield curve to the disinversion, that's why I put here borrowed time. This has been a pretty common recession indicator. Once we come out of the inversion, that usually within about 12 to 24 months, we are facing a legitimate recession. Now, what do stocks do during recession? It's 50-50. Literally 50% of the time stocks go up during recessions and they go down. We've obviously had a nice correction, 20+% of the S&P, 27, 28% of NASDAQ. Dow was down, in the teens. Russell's down almost 30% at one point peak to trough. So that doesn't necessarily mean recession, but it's like clearly the markets have taken notice of that. Okay, let me see here. I'm going to cancel this SPX trade. I'm seeing it running all morning. So I've got this broke wing butterfly that's trading for about 85 cents. I'm seeing this level lighting up. If this piece of crap gets back to 556, I'm going to be annoyed. I'm going to cancel this broken wing. Update. Okay. Where's the SPY at right now? SPY is 548. I still need this thing by, it was a tomorrow expiration. I need to get up to 556 for break even. That's still a tough task. So I probably did the right thing. I pulled the plug on a trade. I lost, it was a $2 debit. I closed it out for a 60-cent credit and just took a small loss. And then my hedge trade is also garbage today. I mean, this is price action. We gap lower and we come back in to eat into the gap. So price really hasn't gone anywhere today. We are down on the day, but price action that we see is it's slightly higher than where we opened. So market's at least making a comeback. The whole day could be spent doing this. We don't break the highs. We don't break the lows. We just had this reaction, and then price just kind of hangs out here for the day. Why would that be a very viable play out for the day? Well, we have Mag 7 earnings today and tomorrow. That's probably more important than a little news today, right? Why? Because they can keep the market chugging along. Am I trading gold today? No, I'm just watching it. I'm still in gold. I'm still watching gold. I want to see pullbacks on gold, but I'm not a short-term scalper trader on gold. I hold its portfolio allocation. I want to add a lot more to it on decent levels. If we break and go higher, it's a good diversifier. Okay, we did gold, we did silver. We were into some of the treasury stuff. I'll go currencies here in just a moment. I want to look at market breadth in China. So let's go back to this chart. So that's my intraday stuff. Let's go to China. Let's put a trend line here. It's kind of all I'm really watching on China is if that trend line still holds. My exposure is less than what it shows right here. I do have some shares of Baidu and Baba. I got out of KWeb for profit. I got out of FXI for most of my accounts of profit. I still have JD. So JD is still some exposure as well. I'd like to see if China can still make a, maybe a high, maybe some sideways, maybe a bull flag, and then go higher. Or we come back up and fill this gap, which is what price looks to be doing now. We maybe head back down for a higher low, but we hold support, support, support. But I have noticed here on China, like trading confirmation, although it's very aggressive, like trading confirmation can be way easier. See what I'm saying? Like we go down here, up, down, connect the highs. That was a great spot to buy, and price went immediately your direction. So what I tend to do is I try to buy extremely low. So like, buying this low or buying this low, it's like I'm not exactly spotting that low perfectly. Coming into the moving average cluster, like sure, it's hard to call the bottom every single time, but confirmation can help. So similar here, if we have a let's say a pullback and a pullback and a pullback, connect the dots, we get above that stop loss below, like we can go back to those highs. That could be a good trade on China. CQQQ, I'd wait on that one. Alibaba. So a big dump on Alibaba, but back into the middle. I do have some shares and options. A lot of my options, as this thing dropped down to 99, I was selling like $75 and $70 puts. So this cluster down here is looking pretty good. So for Alibaba, let's go into Alibaba. So I have a lot of puts with a lot of time that's still in them. This is a bull put spread. I have some shares. I'm up, $4,500. Like it's fine. It's just a bunch of options. Most of them show some profit, which is good. So I'm going to take a look here. The June expirations, I'm probably getting a majority of the profit on. Let me go in here for Alibaba. So I have a June 20th credit spread and a September 111. So let me put in a BP here. Oops. So that's a bull put spread. That's a 111. So between the two of them, the 111, I mean, that's a big income trade there. That's almost $600, and I'm up about 63%. The bull put spread for June, I'm up 95%. I'm just going to go ahead and protect this profit. I mean, it's like, do I sit right now and wait? I'm in two contracts. Most I can make on this trade is $626. I'm up $595. I'm just going to take the profit. So I'm going to plug this in as another winner today. Alibaba, that's a 65 by 40. And it was 313, hopefully closing this down for, like 20 cents or so. Even better. 15 cents. Let's go. Give me some liquidity. I'm going to go just above the mid price. Come on. There we go. 16 cents. It's not freaking bad at all. Cool. So let me go through and close these out. I've got a hard stop here in about 10 minutes. I'm going to try to get through some trades and close out and talk about some currencies. So this is my 111 for September. There's my bull put that I'm going to close out right now. So bull put, close the whole thing, 16 cents, filled. Easy peasy. Alibaba on this one. Bull put spread looks pretty good. So that one closed. This one, 65 by 40. This one's only for 250, but still up about 95%. I'm just going to take it. It's in 2 contracts. Closing 16 cents. So close there. This one closed out. I'll keep the 111 trading. This one, 308, up 295 bucks. I'm going to close this one down. Filled. Closed. Okay, no shares on BABA here. No here. This one should have it. Okay, so closing this one. There we go. So not bad, 568 bucks. I will take that across the board. Alibaba, no exposure here. No exposure here. No exposure here. And this one has the wide spread with some shares. Shares are up. Bought it at 100 bucks. Not too bad there. I still want to ride Alibaba out a little bit longer. So I think I will. Group positions, close. Close this down for about 95%. Come on, 16 cents. Let's go. There we go. Filled. So now, quick trade, quick check Alibaba. Closed out my bull put spreads. Still have the 111s for September that are up about 62%. You know, not bad. I mean, my max at 580, 585, 591. Super low strike prices. I mean, I don't know. It's close, but I think if I get up to like 75%, I mean, these are so low. We're trading at 118. I mean, this is way out of the money. So if I go to September just based on the options calculation, this is a, 4 delta. So the probability of that actually hitting and getting assigned, it's very, very slim. Even if it did get assigned, I'd still be okay owning it. I guess my biggest risk on that one would be that they delist, but that's a risk I'm willing to take. Baidu, still have some covered calls in the shares that I own. This one is a collar trade. Let me check on this really quickly. And then we'll talk currencies, and I've got to go in about 7 minutes. What a interesting day. Okay. Baidu. Have some shares. They are covered at 95. So this is a bull put. This is a bull put. And this is a covered call. There. So have some shares. I've only covered 100 of those shares. 95 out to May. This one's probably going to be, right now it's up 56%. I'm just going to let this one expire. If it gets called away, I make money on the trade. I'm low 80s break even. And then this trade isn't too bad. I'm up 52%. trying to think by June 20th. I don't know. It's a low profit percentage, but it's just less risk overall. It's not a bad chunk of profit just to take. Let me kick this one around. So let me go maybe a Baidu. Close spreads. I'm just going to put a question mark here. So I might jump in and manage those trades into closing. I mean, I'm up $200 and another $92. So about $300 on the trade. Max profit would be $650. So just under 50%. But I also don't necessarily want an assignment on more shares of Baidu if something were to happen where the price is going to drop. If I own more shares in the 80s, it's like I think this stock would freaking hold up. But we've been as low as 75. I don't know. I think I can hold it and repair it. I just hope the damage is kind of done. So I'll kick that one around. All right. I'm going to wrap things up here in 4 minutes. Let me power through these currencies. Let's go Aussie CAD. I still like long, looking for any pullback here. So low, high, look for a 50% pullback and then see if we get back to around 91.50. Aussie Swiss. Not a lot, but noise right now. I'm still looking to see if I can spot a bottoming pattern, so keep an eye on that one. Aussie yen, I keep saying this. If you're watching yen crosses, there might be some good upside potential. Just trade what you see. Go to the smaller time frame. I'm still long Aussie New Zealand. I just didn't get filled on my level at 106, so I'm just going to wait. I'm going to see if this will settle into a bottom. So here, maybe settle into a low, and then come back up towards. I'd like to get this thing back to 114, if possible. VWAP, yeah, for futures, day trading futures, yes, I think is important. Aussie dollar, I'm waiting for some type of dip. I don't think I'm going to buy much unless it was if it's a break and a pullback, then maybe a buy there with confirmation because this would be all open space. But I'm just watching the dollar index. CAD Swiss, hopefully looking a little bit better. Still willing to average into the bottoms. Still looking for a bottoming formation. Don't have it yet. CAD Yen, I think this one is a low risk, high reward. It's going to be noisy at the bottoms. But if it's a entry, there's profit. The risk is relatively manageable. So I don't think it's a terrible trade, especially if you have some risk on. But I definitely want to use the stop loss. Swiss yen, no trade. Euro Aussie, probably selling off a little bit. Yeah, I don't know if I'm going to get to the pullback. I was hoping to get like a 50618 swing here. So high, low, lower, high, lower, low. If we don't get that trade and this just slides lower, that's a tough trade. I'm not going to chase it. I'm not selling lows. Euro CAD, working out. If anybody sold this at equal highs or resistance, I was talking about this structure breaking. This one's looking pretty good. If you're short Euro CAD, I like this trade down to this level. So around 5,400 be a good target. Relatively safe. Euro Swiss, Euro's dropping. I'm still willing to add into the lows. I'm still watching for bottoming formation. Euro pound giving back a lot of the noise we saw through that rip on the dollar where the euro benefited. Euro pound is still pulling back. I mean, honestly, if we pull all the way back into this support level or these lows, I'll just buy more euro pound and just trade this nasty range. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie. I mean, this might just continue to slide lower. I'm not chasing it, selling a bottom. Euro dollar. This is the pullback I've been talking about. If you are short euro dollar, I would still be willing to short this thing at the highs too. Don't just short this and say, well, my stop loss is right there. That's way too tight. Even a stop loss here is way too tight. I would go like an ATR above the highs and say that's a stop loss, but be willing to take small trade, and see if this pulls back to any of these pullback levels. 236, 30, 382, 50, anything in there for profit if you want to get started on euro dollar. Pound Aussie, I'm going to wait. Pound CAD, I was hoping we'd come up to hit resistance. No trade on it yet. Pound Swiss, I'm still looking to go up. This could actually offer up a good pullback. So if we pull back into this area here, maybe a high or low for that swing back into 113 or so. Area 1, area 2. If I traded Pound Swiss in this chunk, I think there's a good chance we go back into this pocket. So not a bad trade. I don't think Pound Swiss is a bad trade at all. Just make sure you check your margin. Pound yen, no trade. Pound New Zealand. It did offer up I don't think this is done yet though. High, low, maybe a 50618 could still be tested, but they're volatile. I'm just being so careful right now. Pound dollar, maybe on the shorter time frame starting to confirm a sell-off. I think euro dollar is actually a little bit cleaner right now. New Zealand CAD still waiting for a 50618 pullback. on this swing. So somewhere in here, I'm looking for a swing up. I like that trade. New Zealand Swiss, actively looking to see where I can spot a bottom. New Zealand yen, similar to Aussie yen, if it's going to offer up some more upside, the defined risk would be scaling in through these bottoms, stopping out maybe one ATR below those lows. New Zealand dollar, I'd wait for a pullback. Dollar CAD, still choppy around this area. It might just keep leaking lower. I'm not sure. I'm staying out of this one for now. I'm interested in buying down here, or I'd have to see a break, retest, fail, and then more downside. I'm not just going to say that's the trade. It's just a terrible position right now. Dollar Swiss, waiting for a bottom. I think we pull back to like 87.50 to 8800. Dollar yen, I think there's a good opportunity for this one to be the low as well. This low, if you're long dollar yen, area 1, give it a chance to see if it spikes the lows but don't get faked out. Stop area maybe 1 ATR below that, and then room to chew back into like the 146, 147, 148 area to the upside. And the answer to that is no. Elias is asking, do I have a range of what I want to make per day? No, I never do that. I've been trading for 25 years, and it's never been about how much money I'm trying to make. It is about making good trades, and the money ends up just showing up. Like I've made the most money by just placing good trades, and I think you put so much pressure on yourself when you're squeezing out trades, you're forcing trades. Not my style. So I give myself the entire year to grind. And like right now, it's like I'm up for a lot of accounts that if I wanted to invoice, clients this year, it's like I could, and I would invoice them at the halfway point, see how that looks, and then maybe invoice them again at the end of the year. Or I could just sit and wait and hopefully hit a high watermark. But I think I've earned a little bit of a profit this year when I've grinded through these markets and I'm up double digits, and the market's still down double digits. So anyway, but I've never set the goal of like, I have to make this today. I hate that. It's my least favorite thing to do. I think that's so much pressure. It reminds me of like day one Forex trading when I'm trying to scalp, 10, 20 pips a day. It's very, very difficult to set those goals and force those trades when sometimes you just don't have to trade. That's the hardest thing, is having discipline and patience. So anyway, there's my quick answer. All right, I got to go. Thanks everybody. We'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.